So in public session we're dealing with item number 5, which is our engagement with AIB on banking matters. I want to welcome Colin Hunt and your colleagues. This is your first time before the committee, Mr. Hunt. I want to wish you well in your time with the bank and your engagement with this committee here, which is really positive. A note on privilege. I wish to advise the witnesses that by virtue of section 17(2)(I) of the Defamation Act 2009, witnesses are protected by absolute privilege in respect of evidence to this committee. If you are directed by the committee to cease giving evidence in relation to a particular matter and you continue to do so, you are entitled thereafter only to qualified privilege in respect of your evidence. You are directed that only evidence connected with the subject matter of these proceedings is to be given, and you are asked to respect the parliamentary practice to the effect that, where possible, you should not criticise nor make charges against a person, persons or entity by name or in such a way as to make him or it identifiable. Members are reminded of the long-standing parliamentary practice to the effect that members should not comment on, criticise or make charges against a person outside the Houses or an official, either by name or in such a way as to make them identifiable. Can I invite you now, Mr. Hunt, to make your opening statement, please?
Thank you very much indeed, Chairman. Chairman and members of the Committee on Finance, Public Expenditure and Reform and Taoiseach, it is my pleasure to meet you today for the first time as CEO of AIB. The relationship between AIB and the State at every level is a matter of enormous importance to the bank and to me, and I look forward to open, positive and productive engagement with you. Alongside me today are members of my executive team, Helen Dooley, Tom Kinsella and Jim O'Keefe. It was a privilege for me to be appointed to the helm of AIB. I am keenly aware that the bank is not just a financial institution that accepts deposits from the public and channels money into lending activities, critical in all as these functions are. The bank plays a vital role in the Irish economy and operates under a very strict social licence, reaching into every community across the country. AIB and the State are inextricably linked, and with 2.2 million customers and a staff of almost 10,000 people, the bank has a uniquely close relationship with the country. As a bank, we put the rights and interests of our customers first. We must establish trustworthy financial products, support Ireland's positive economic development, and ethically conduct our operations in compliance with regulatory requirements, stakeholder expectations, and our customers' needs. The financial services sector has experienced the implementation of far-reaching regulatory and supervisory reform. You are aware that we work in a radically transformed regulatory environment where the European Central Bank and the Central Bank of Ireland concentrate on all aspects of our business from a customer, conduct, prudential and policy perspective. Now, leadership, accountability and culture have come under particular scrutiny. I support that level of surveillance. I do not regard it as an imposition, and I assure you that we will continue to implement the standards and behaviours expected by our regulators, by our shareholders and by our customers. I will continue to drive the kind of organisational culture that over time persuades the public we have successfully made the transition to a more customer-focused ethos. But good culture is not built on slogans. Good culture is built on a unified and highly developed awareness of proper governance and an appreciation of the imperative to deliver fair outcomes for all our customers. Enhancing accountability at every level across the AIB is one of the cornerstones of my ambitions for this bank. In addition to reinforcing a consumer-focused culture, I emphasise that another central priority as CEO is to see the return to the State of the recapitalisation monies provided by taxpayers following the financial crash. At this point, AIB has returned €10.8 billion in capital, dividends, fees, coupons and levies. The State's remaining 71% shareholding currently has an estimated market value of some €8 billion, and my team and I will spare no energy in ensuring that AIB remains positioned to allow the government to recoup its investment at a time of its choosing. In order to achieve that, it is essential for the growing economy that AIB continues to be a well-capitalised, sustainably profitable, stable institution, sufficiently robust to deal with increased risks and uncertainty, including Brexit. Without that basic profitability and stability, other bank functions and obligations cannot be fulfilled, most importantly for our customers. You will be aware from the publication last month of AIB's 2018 annual report that the company delivered a strong operational performance. Its full-year profit before tax was €1.25 billion, allowing the payment to our shareholders, including the State, of an increased dividend of €461 million, bringing the total dividend paid by AIB to the State over the past 3 years to €810 million. New lending exceeded €12 billion, up 15% in the previous year, And in spite of significant supply constraints in the housing market, mortgage lending rose by 16% to 2.8 billion in 2018. As a market-leading bank, it is essential that we remain technologically advanced. The unrelenting customer shift to digital banking is increasing at a rate of 10% year on year. Of our 1.8 million daily customer transactions, 1.4 million are now conducted via digital channels. AIB now has more than 1.38 million active digital customers, a growth curve that demands significant investment if we are to be the kind of digital retail bank that can compete in a rapidly changing, technologically driven world. However, in addition to developing offerings such as our new digital business banking platform and dedicated apps, we must also focus investment on ongoing system resilience improvements. The threat of cybercrime remains high in modern-day banking, and continuous risk management involves the purchase of costly tools and services. New regulatory requirements around GDPR readiness also require significant spend, as does the ongoing need for acquiring enhanced data and analytical capabilities. When I joined AIB in August 2016, I was struck by a number of elements. One was the tangible progress the bank had made in terms of recovery and restructuring, and another was the level of resource still required to resolve enduring legacy issues, principally rooted in the financial crisis. This committee is well versed in the facts surrounding the tracker mortgage examination, which is now coming to a conclusion for AIB. We are, of course, fully cooperating with the Central Bank of Ireland in terms of its enforcement process. The examination programme is materially complete now, with final technical activities underway during 2019. This does not in any way obviate the fact that we will continue to deal on an individual basis with impacted accounts that require further attention through the appeals or the complaints processes. I am very aware of the financial losses and human distress caused by the tracker issue, and I can assure you that this chapter in the bank's history will not be finally closed until all adversely affected customers are properly compensated with fair settlements. There is another legacy issue that not just critically impacts the bank's viability in future, but potentially impinges on the resilience of our economy. This is the question of how we deal with non-performing loans. I emphasise the progress that has been made so far. Exposures have fallen from €31 billion in 2013 to just over €6 billion at the end of last year. In personal consumer terms, this means almost 100,000 solutions, including 43,000 solutions for primary dwelling houses. We are now some 10 years past the global financial crisis. In that time, AIB has devoted significant resources, including 1,500 people, with the key objective of enabling our customers to stay in the family home and keeping viable businesses operating and supporting jobs. We developed the largest range of solutions for customers in the Irish marketplace, and we continue to initiate new solutions, such as the development of mortgage to rent with iCare. We also engage with a number of external agencies, including the IMHO, Step Change and the IFA, in our overall approach to address customers' difficulties. Our clear preference is to restructure on a case-by-case basis with customers who engage and to provide sustainable solutions that sometimes include writing off debt. We do this as retention of our customers through good and bad times is key to our own sustainability as a bank. As already noted, 93% of our mortgage customers continue to meet the terms of their restructures. Addressing NPLs in a sustainable way is essential to the resilience of the banking system and borrowers, since elevated levels of NPLs severely compromise the capacity of lenders and borrowers to weather future downturns. The Central Bank, as part of the single supervisory mechanism, continues to require banks to reduce NPLs to European averages by the end of 2019. However, up to now, the NPL resolution process has been a gradual and frequently lengthy one. The pace of reduction has begun to moderate as we deal with the more intractable cases. Meanwhile, we cannot ignore the pressure that the ECB is exerting on Irish banks to reduce, within a relatively short time frame, their non-performing exposures. At the end of 2018, AIB's NPE level was 9.6% of gross loans, or €6.1 billion. Last week, we announced a portfolio sale of €1 billion, where 95% of the arrears were over 2 years non-performing and 80% of arrears were over 5 years non-performing. This sale further reduced our non-performing exposure ratio to market estimates of some 8%. The European average is approximately 3.5%, and our aim is to reach circa 5% by year end, but this should be seen as a milestone and not a destination. We are still carrying a large chunk of deep long-term arrears that simply must be reduced. It is imperative that we bring clarity to the debate and confront the reality of the impact of NPLs on individuals, on the economy and on banks' viability. NPLs inhibit the bank's primary function of lending to the economy, and ultimately they lead to higher bank costs, resulting in higher rates for businesses and home buyers. It's also true to say that those individual customers who do meet their loan repayments are in effect negatively impacted by those who don't repay. Overall, Irish banks must hold more capital than European banks because of our credit default history. And this requirement to hold large and expensive provisions or buffers against the possibility that customer debts will go into default means additional costs for our borrowers. For example, Irish banks must hold approximately €50 of capital for every €1,000 of lending, compared to €16 per every €1,000 in the case of European banks. The deeper the arrears, the greater the buffers, and all this impacts the bank's ability to function normally. AIB has to ensure it is not left vulnerable to future economic downturns from existing non-performing loans and potentially new defaults. And while the bank is very well capitalised, I, as CEO, would find it unconscionable to allow the bank to confront future shocks while still fettered to legacy issues that we can actually deal with now. In order to best equip the bank to deal with future economic challenges and to continue to support the Irish economy and our customers, we must work to put our balance sheet into the strongest possible position. I appreciate that some members of this committee are strongly opposed to the sale of NPL portfolios. But let me be clear, we are not in the business of allowing our customers to be cast aside as an inconvenience. The Oireachtas itself has ensured that the protections of the Central Bank of Ireland's codes of conduct are transferred with the loans to the new owners, and we fully support that. Our strong preference is to retain these customer relationships where they are in our mutual interest and where the customers are engaging with us. Meeting demand for housing is obviously a continuing struggle for the market, in spite of a 25% increase in the number of new dwellings completed last year. AIB is actively engaged in residential development as an area of strategic importance for the economy and the bank. In 2018, we were the primary funder on live developments comprising 4,600 units, which was an increase of 53% in the previous year, as well as funding €175 million of mortgages for self-bills. We are in our third year of funding a development in Poppentry, Dublin, for the not-for-profit developer O'Coulon Co-Housing Alliance. This has proved to be a strikingly impressive model for affordable housing, allowing local purchasers with a maximum income of €79,000 to buy their own home. There is, of course, the ongoing confusion around Brexit, and it is just one of the exposures that Ireland faces as a small, highly globalised economy. We are also conscious of cyclical risks associated with changes to international trade patterns and taxation regimes. I mentioned earlier the symmetries between AIB and Ireland, and we all must work to ensure resilience in the economy and in the financial system in the face of those risks. We may not be able to control the external environment, but we must be alive to actions that we can take domestically to minimise future adversity and downturn. As of now, the economic outlook for Ireland remains positive. I'm very glad to become CEO of a bank that can help fuel that economy and play a strategic role in ensuring that the future of this company and this country remains robust. We very much appreciate the opportunity to meet with you today, and we look forward to taking your questions. Thank you.
Thank you very much, Mr. Hunt. Deputy McGrath.
Thank you very much, Chair. I'd like to welcome Mr. Hunt and his colleagues here this morning, and to wish you all the very best, Mr. Hunt, on your leadership of AIB Bank. Can I start by focusing on the tracker mortgage examination and on this issue of the prevailing rate group of customers, Mr. Hunt? So in the questionnaire, question 25, you put a number of 5,195. That's mortgage accounts, presumably, that are in this category. Now, we've been looking at this issue for quite some time, as has the bank and as indeed has the central bank. We had extensive engagement with your predecessor and the team back in September 2017 on the 26th. On the 23rd of January 2018, and very detailed engagement with the Central Bank on the 18th of January 2018 as well. And I think the fact that you have come in now as a new CEO affords you an opportunity to take a fresh look at this issue, and I would suggest that you do so if you have not already done so. And from looking at the original mortgage documentation that underpins this particular group of customers, it's very clear that at the end of their fixed rate on their mortgage, they were to have the option of going on a further fixed interest rate period, converting to a variable interest rate mortgage loan, or converting to a tracker interest rate mortgage loan. And then it goes on to say at the bank's then prevailing rates appropriate to the mortgage loan. Prevailing rates is not defined within the mortgage documentation as far as I can see. But of course a tracker mortgage is defined, and is defined in section 3.6 as being the ECB rate, which is a published rate, and a tracker margin as stated in part 1 of the particulars of offer of the mortgage loan. And to my knowledge, part 1 does not actually specify the margin. But of course, despite the fact that AIB withdrew tracker mortgages for new customers in October 2008, existing customers continue to remain on a tracker, and those coming off the fixed rate had a contractual entitlement to be offered a tracker rate. So there was a breach of contract, and the bank was late in acknowledging that and did eventually, under pressure from the central bank. But it seems to me that this issue of the prevailing rate, that you're on very thin ice really in your interpretation of that. There is no definition of what the prevailing rate is, and I certainly would be of the view from looking at it that the customers have a legitimate expectation that the prevailing rate, being the margin, which is the only element here that's up for discussion, was the margin that prevailed at the time these mortgages were initially given out, or the margin that was in existence for mortgages that were continuing to be on a tracker at the time that these customers ended on their fixed rate. So have you looked at this in detail, and can you give us your interpretation and your view of this issue?
Thank you, Deputy. I'll hand over to my colleague Tom Kinslow, who has been charged with looking after the tracker issue for us over the past number of years. But can I just give you my own views in relation to it at the start? I think that the tracker issue is a stain on the reputation of AIB and of other Irish banks. I think that it arose due to a lack of foresight, weak controls, very poor communication. But as CEO, I want us to draw a line under this affair once we have concluded the examination and the enforcement to the satisfaction of the Central Bank of Ireland. Over the course of the past 3+ years now, we have been engaging very heavily on this issue. We have a significant number of people working on it, and that is right and that is appropriate. And they have been focused on examining the issues and providing redress and compensation where it is appropriate. We've also been focused on enhancing our controls within the bank to minimise the risk of such an issue happening again. And while you can improve controls and you can improve communication as much as you want, ultimately the best protector against the recurrence of this sort of an issue is the culture of the institution. And we've made very significant strides in recent years in putting the customer at the centre of our concerns and becoming a genuinely customer-focused organisation. We've more work to do in terms of enhancing our openness and our transparency, in terms of not only our internal communications but also in terms of how we deal with external stakeholders. And I, as CEO, take very, very seriously my responsibility to lead and drive that cultural change. But now I'll hand over to Tom.
Thank you. Deputy, the programme has been running for 3.5 years at this stage. We've analysed over 650,000 accounts. We've identified 40 different customer groupings of impacted customers. At all times we've tried to, where there's ambiguity, is to fall on the side of fairness and on the side of the customer. In relation to this particular issue, the customers we're discussing did not have a tracker mortgage. They rolled off their fixed at a time when there was no prevailing tracker rate available. Our contention is, and we are satisfied that had there been a tracker rate available, it would have been priced at an unattractive rate, and therefore the customer suffered no detriment. We took a long time to reach that view. We took on board conversations with the Central Bank. We took on board the independent oversight of our independent overseers, and we are satisfied at this stage that the customer suffered no detriment. Yes, there was a service breach. We should have had a prevailing rate available. We didn't, but had it been available, it would have been attractive. And therefore, the remedy is the €1,000 that has been offered and the €615 for the independent advice. The customer then the customer then has the right, obviously, to appeal and take it further.
Okay, and I think that's a very good summary of the position of the bank, which has been the position of the bank now for quite some time. The prevailing rate, is that defined anywhere?
The prevailing rate, we define it as the rate now existing in the marketplace. So, for instance, today's fixed rate is today's fixed rate. It's not the fixed rate of 5 or 6 years ago.
Okay, but trackers had been removed for new customers at that stage, but not for existing customers. And just to come back to the point you made, and the bank consistently makes this point, that these customers were never on a tracker mortgage, never had a tracker mortgage, that's completely irrelevant. There are thousands of customers across all of the banks who are deemed to be impacted customers because they had a contractual right to a tracker mortgage or to be offered a tracker mortgage, and these customers are in that category. So there is a breach of contract. I think you now accept that. They should have been offered a tracker mortgage. You said there was no tracker rate available, and this is the nub of it. At the time that these customers came off their period on the fixed rate and were entitled to be offered a tracker mortgage at the prevailing rate. So we agree the prevailing rate is not defined. We agree that new customers were not being offered a tracker mortgage at that point in time, but other existing customers continued to be on a tracker, so that was a prevailing rate. And also these customers who had the contractual entitlement at the time that their mortgage was offered and drawn down, there was a prevailing rate at that point as well. There was a defined margin which applied to tracker mortgages at that time, even though the margin is not specified in their contract. So you have made an interpretation that is very much in the bank's favour. And you talked, Mr. Hunt, at the beginning of your remarks about a customer-focused culture. There is absolutely ambiguity in this case. There's no doubt about it. Yeah, you can make an argument in both directions, but it's not clear. There's no definition of prevailing rate. Trackers were gone for new customers, but trackers continued for existing customers. And the only issue here is what the margin should be, because the ECB rate is a published rate. And the margin, from my analysis of it, should have been the margin that applied when these mortgages were taken out. What was the margin being offered by the bank generally on their tracker mortgages at that point in time, or else the margin that continued to apply to the existing mortgages that remained on a tracker when these other ones were coming off. Have you a response?
We took a long time to consider this issue, Deputy, as I'm sure you're aware. Again, we took on board a lot of advice. We took on board the central bank's view of the world, and that's why we got to a position where, yes, there is a service breach. There's no margin identified in their contract.
So you call it a service breach. Do you accept it's a contract breach? They were entitled to be offered a tracker under their contract. I'm not sure why you're sticking with the word service breach. Is it a contract breach?
Because we believe it to be a service breach.
Sorry?
We believe it to be a service breach.
Is it a breach of contract?
No.
I'm not sure why you're haggling over that word. I mean, their contract is very clear. They were entitled to be offered a tracker mortgage. You can argue about the rate, but they weren't offered it. That's a breach of contract, no?
What's the difference?
I think they were...
There's a reason why I think the bank are not accepting that word, but can you
They were entitled to choose another fix, an SVR, or a tracker at the then prevailing rate. So they had the option to choose. And we're saying, because we had withdrawn trackers in the circumstances that Colin outlined, in circumstances where we didn't foresee the consequences of withdrawing them, there was no then prevailing tracker. And the relevant date, which Tom has alluded to, when we determined the then prevailing tracker, is the event of rolling off the fix. It's not the date that the customer takes out the loan. And that's how trackers, or that's how this was operated in the bank. So if, when somebody rolled off a fix, the tracker rate had gone down in the last few months, they got the lower tracker rate, and equally if it had gone up, it was the rate then prevailing on the event, which was the rolling off of the tracker of the fix.
But what you did was you retrospectively manufactured a prevailing rate.
No, we haven't retrospectively manufactured a prevailing rate. We reinstigated the tracker rate in, I think it was December 2013, to remedy the service failure that Tom was talking about.
Can you just nail that point? Why do you keep calling it a service failure?
Well, that's what it was. We failed to have available a prevailing tracker rate.
And yeah, so explain how you arrived at that prevailing rate.
Which prevailing rate?
The one that was subsequently offered to these customers when you accepted that they were impacted customers.
Oh, sorry, in the same manner that we always determine our pricing, we take into account cost of funds, we take into account a range of factors in order to determine the pricing. So in December 2013, when we reinstated the margin over the ECB, that would have been taken into account the various factors that a bank takes into account when it is setting its margins. But what we haven't done is manufacture a prevailing tracker rate for the period when we didn't have one.
But you weren't offering any new trackers from October 2008.
No, correct.
And what was the prevailing rate at that point when you withdrew trackers from the market for new customers? What was the margin at that point?
I'm not sure, Deputy. I think it was 1.5%.
Okay, I think it depended on the LTV. It was
LTV,
between 1
correct.
and 1.5. So that was the last point in time when AIB was offering trackers at a particular rate. That is the last point in time. And these 6,000 customers, over what time frame, what period of years did they finish on their fixed period and became entitled to be offered a tracker?
Between October 08 up to December 12.
So October 08 to December 12.
December 13, my apologies. December
Okay,
13.
so it was over that span, that period of time, that those customers individually were rolling off their fixed rate. Okay, so is it not the reality that throughout that period of time, the only tracker rate that was in existence from AIB's perspective had a margin of between 1 and 1.5%, depending on LTV. There was no other tracker rate.
No, there would have been people who had gone on tracker earlier than October 08 who would have had different margins. The margins, over the course of the product, the margin changed.
Okay, so what was the trough and what was the peak? What was the span of that margin from its entire history through AIB? When did you start offering trackers? We know when you ended, October 2008, 10th of October.
04.
Okay, so what was the margin, the span of the margin from?
The span of the margin,
roughly?
Roughly, I think, was 0.75 up to about 2.5.
Okay, so at the peak about 2.5%. Okay, and at a minimum about 0.75%. I mean, look, I think the reality is this issue is going to work its way through the Financial Services Ombudsman, the High Court, and I think it would be a great shame, given all the good work that has been done in acknowledging failings, the good work in leading the way on mortgage rates, Mr Hunt, and so on, which you have got credit for, that if the bank is in the end having to be forced to provide for the redress and compensation, that there is at least a very arguable case that these customers are entitled to. Yes, you can argue it the other way, in the way that you have done, but there is a very good chance that you're not going to win this ultimately, and it will come at a high cost to the bank, not just financially, but reputationally. And can I just ask what the cost would be to the bank of putting these 6,000 customers, offering them redress and compensation and putting them on a rate of between 1 and 1.5% of a margin above whatever the ECB is at any point in time? Yeah, has that been costed?
To be honest, Deputy, it depends on the individual size of the mortgage, how long is left to run, etc. There's so many variables that I couldn't put a cost on it.
Okay, so it hasn't been costed. And equally, I assume it hasn't been provided for within the accounts? There's no provision for it? Okay, and has the bank taken legal advice on the issue?
Yes, we sought legal opinion on the issue.
Okay. So, as far as the bank is concerned, this issue is closed, is that it?
Well, the issue will be closed when the Central Bank of Ireland concludes its tracker mortgage examination. Before it then moves on to we obviously have a 12-month period beyond this for submission of appeals, but we won't decide the tracker mortgage examination is at an end. It's the Central Bank of Ireland will make that decision.
Yeah, and what they have been saying to us on this issue is that these customers are impacted, and so they're now within the framework, and so they can take their cases through the system, the Internal Appeals Committee, the Ombudsman, and potentially the court if required. I'm sure my colleagues will pick up on this issue. If I can just deal with one other issue, Chair, and I can come back in later on. And just in relation to the correspondence, Mr Hunt, that a lot of your business customers, your SME customers, have received in recent days in relation to the sale of their accounts to Everyday Finance DAC, and again the withdrawal of overdraft facilities, because Everyday will not be offering these overdraft facilities. Can you just put that in context? What portfolio sale does that relate to? How many such customers are there that have overdrafts that need to essentially be ended by the 7th of June?
Okay. I'm going to hand over to my colleague Jim O'Keefe in a moment on this. But I think it's important to bear in mind the context that we are undertaking these measures in. We're 11 years post the peak of the financial crisis now. We are under instruction from our regulator to continue to reduce our non-performing exposures down to European averages. But even leaving aside the pressure from the regulator or the instruction of the regulator, I'm very conscious of the fact that this is an economic cycle that has had a very long run. The global economy has performed very, very well in recent years. But I'm equally conscious of the fact that we are beginning to see some straws in the wind in relation to the economic outlook for the next number of years. You would have seen earlier this week the IMF reducing its growth forecast for Ireland. Last week, the World Trade Organization reduced its estimate for growth in trade globally last year from about 4% to something of the order of 3%. We're dealing with huge uncertainties in relation to potential trade wars, potential economic wars between America and China. And that's not even to take into account the stress that Brexit is imposing on the economy. I know that we've managed to escape having a hard Brexit tomorrow, but the can has just been kicked down the road for another 6 months, and that impact is being felt particularly by our small and medium-sized enterprises. We would have detected in the opening quarter of last year that you saw a lot of deferral of investment decisions taking place because the small and medium-sized enterprises that we service, many of them are very heavily dependent on the British economy. And if there's no certainty about their ability to access that market, well, then they weren't willing to take the sort of investment decisions that would be conducted in the ordinary course of business. So we are dealing with a very, very uncertain economic outlook. And I have an obligation as CEO, and my colleagues as members of my team have an obligation to ensure that when times are reasonably good, that we put the balance sheet of the bank into the strongest possible position now, so that we can continue to support our customers regardless of what the economic cycle throws at us over the course of the next number of years. We have a very, and that's the context in which we're reducing our non-performing exposures. We have a very clear preference to engage with our customers, to come to agreed solutions, and to keep those customers as customers of AIB. But no option can be ruled out because the overriding consideration must be to position the bank in the strongest possible position to deal with whatever may unfold in terms of an economic downturn ahead of us. Jim.
Good morning, Deputies and Senators.
And if you could maybe outline the options to these customers, Jim, who are facing the prospect now of their overdraft being gone within a 2-month period, because they are contacting us and they're in real trouble, a lot of them.
No, and indeed, Deputy, this is an item that has been raised with us, and I will explain the steps that we've taken in relation to it. I do want to make 1 or 2 points in relation to the portfolio. Clearly, from our perspective, in dealing with the issue that you've just raised, I'm conscious of the fact as well that we have given all opportunities to customers. We still, as Colin will have mentioned, have a significant team of people operating here. So even for this portfolio, within the time from when we started looking at this portfolio, 500 million has not been included because we've been able to work through that with customers. So we've been constantly reaching out to customers here to engage. Notwithstanding that fact, we recognise that there may be customers in here who are not reaching out and engaging with us and putting their businesses that are there at risk. and we know that the overdraft is a particular challenge in terms of the cash flow. So we have engaged with the customers and are writing out to customers very clearly to say what will happen is that the cash flow will not disappear. What will actually happen is they have an overdraft today, they're at a particular level in that, they will have the opportunity to draw that down before the loans actually transfers, and that will then transfer as a loan as part of that, and they can use that cash flow in a credit current account thereafter.
Okay, so it's the same as the last time. We teased this out before.
Exactly.
So a customer with an overdraft of €50,000 that currently is 10,000 overdrawn, they can max that out as such prior to the 7th of June, and then it carries over to every day.
Exactly.
But it will cease to exist as an overdraft at that point in time then, and it's a matter for the new relationship.
It is, but I think to be fair, because where we've gone with this is really in the circumstances to try and put the customer at the centre of it all. It is making the cash flow available to the customer, albeit that it may not come in the form of an overdraft. Very final question, just on the overall position with MPs, Mr Hunt. So the latest transaction announced, you say, will bring you to circa 8%. Your aim is to get to 5% by year end, and I think you're laying down a clear marker that that's not a destination, that's only a step along the road to reducing them further. But in nominal terms, in book value terms, how much do you need to reduce your NPLs or NPEs by to get from 8% to 5% in the 9 months or so left in the year?
That is a number we haven't disclosed to date. It is dependent on the flow of new arrears into the stock of NPEs. But it is a significant lift for the organisation to get from a position where 8% of gross loans comes down to circa 5% of gross loans by the end of the year.
I think we can work it out from the figures you provided there pretty easily. Thanks, Gerry. I'll come back in a minute.
Deputy, it actually does depend. There will be an ongoing flow, and we don't disclose what that flow is. But there's an ongoing flow coming in at the same time we're dealing with the stock.
Thank you.
Thanks, Gerry, and thanks, Mr Hunt, and you're very welcome, and congratulations on your appointment. And I was actually on the same point. If 6 billion is about 9.6% and 1 billion brought it to 8%, I think you can probably say that to get to 5%, you're talking between 2 and 3 billion. I think is a reasonable figure to put on what you would have to dispose of, or
not to dispose of, that we would have to reduce the NPEs by, but there are multiple ways to reduce the NPEs, and we have, Jim went through some of the options there, but we have a very, very clear hierarchy of preferences. And number one is to restructure the loan in an agreed way with the customer, because we want to have a continuing relationship with our customers. We want to have a growing balance sheet, because that's the best way we can deliver on our purpose as an institution. It's the best way we can support the economy.
And I think that's probably a fair assessment of how this committee would much prefer all of the banks to be dealing with people and not dealing with transfer to vulture funds in inverted commas, or whatever you want to call them. And I think, to be fair, you have made great progress in getting from 31 billion in 2013 to 6.1 billion, as you outlined at the end of 2018. But I think it's reasonable for all of us to say, and you can contradict me, please do if it's not the case, that the 6.1 billion that's left must be the most difficult of the 31 billion that was there at the end of 2013, and the low-hanging fruit and the relatively easy to restructure, and acknowledge that many were restructured and 93% of them are meeting the restructure. But surely it's reasonable for us to say that of the 6.1 billion, obviously reduced recently by $1 billion, that must be the really, really hardcore, long-term, non-performing stuff. And if you haven't managed to resolve it until now, and you are under pressure, as you acknowledge, from the ECB and I suppose the SSM, to reduce it to European norms, is the phrase you used, whether that be 3.5% or 5% or whatever, what other methods at this point in time on the really, really hardcore debt can you do to reduce it in time to get to where you want to be?
The overriding ambition has to be to get it down to a sustainable level and an appropriate level. And we have, as I said, an array of options available to us, but none of the options can be ruled out. And as a last resort, if we have to have a further portfolio loan sale, we will do so.
And that it would be reasonable for us to say you may not want to comment or be able to comment, but 2 to 3 billion more to get from 8 billion, if it's 8% and 5 billion, and you're getting down to 5%, it must be 2 to 3 billion needs to be removed from your balance sheet of non-performing exposures to get you to where you want to be.
Yes, broadly speaking, of an order of magnitude, yeah.
Okay, thank you. You mentioned just in your at the end of Deputy McGrath's questioning about new lending. I mean, anecdotally, I've heard that everything's on hold, nothing is going out right across the country, particularly outside Dublin. Everybody's deferring everything. Nobody's meeting their targets of lending of anything right across the sector. What would you say to that?
Well, I think we've had a solid start to the year as a bank as a whole, but we are responding to customer demand. So if our small and medium-sized businesses, many of whom, as I said already, are very heavily reliant on the British marketplace, if they're deciding to defer investment, if they're not demanding funds from us, well, then we're not going to be supplying lending into the market. We are very, very eager to support our customers at this time. We're very eager to see lending to SME enterprises growing over time. We have restructured the way we address this market in recent months to become ever more customer focused, to have an end-to-end solution for our customers in the business space. But it is a simple truth that Brexit has had an extraordinary impact on business confidence, and we run this Brexit sentiment tracker. We've been doing it for the past number of years. We run it north of the border and also in the Republic. And one of the things that really strikes me about that is, well, it's overwhelmingly negative in terms of SME expectations on the Brexit front. But one of the things that has really struck me and surprised me has been that the degree of negativity in terms of sentiment is so much greater in the Republic than it is north of the border. And that is a reflection, I think, of the scale of the British marketplace versus the Irish marketplace, and also a reflection of the very, very clear dependence of an awful lot of small and medium-sized Irish enterprises, typically those that are outside Dublin, typically those that are supporting communities around the country, and typically those in the food and agri space. They have a very, very heavy reliance on the UK as an export destination.
Okay, and I suppose it's possibly reasonable to say that the people in the north, some of them voted for Brexit, and certainly if you'd asked the people in Ireland about Brexit, it'd be 99%, I think, would say no. About a third of people, I think, in north of Ireland. So presumably people who were in favour of Brexit are probably less put out by it than people who were remaining or wanting to remain. In terms of you obviously give your staff, and you have performance targets in terms of lending and new lending and so on. If you can share with us maybe what their targets were supposed to be and where they're coming in relative to that, because I think you've acknowledged that what I have been picking up generally is the case that people are just not, and I accept you can't lend to people who don't want to lend, and certainly don't want to be lending to people who don't want to take it. But are you at 50% of what you expected to lend, or 30%, or?
Look, as a publicly quoted company, we have to be very, very careful about the sort of information we give out outside the formal financial calendar. We will be having our AGM later on this month, and at the time of the AGM, shortly after the AGM, we will issue an update to market in terms of our performance over the course of the first months of 2019, and we'll be covering all these issues. But at this point, I can't, for very good legal reasons, say anything about the specifics of the performance of the bank at this point.
Okay, even in terms of 2019? Okay, that's fair enough. And if I come back and have to say that answer again, I'll accept it, but I'll still keep asking a few questions. In terms of we particularly had asked, I think, all of the banks about Brexit, I think, which we've covered a bit of, but equally about banking culture and the move that all banks need to, the journey that every bank needs to go on. Some are a little bit further down the path than the others in terms of culture. You have references a little bit more than our previous visitors on Tuesday did, in terms of they had one sentence about it. But where are you in terms of getting to where the central bank certainly want all of the banks to be, and where presumably you and your shareholders would like you to be in terms of the changing of the culture to be more consumer focused, more customer focused, and less maybe reliant on staff performance and bonuses and so on. We'll touch on that later. Just in terms of where you are in culture.
I'm very conscious of the fact that I'm in my first few weeks as CEO of the institution, and I hope I serve here for a long period of time. That will be determined by the board's appraisal of my performance, largely. And my ambition for the institution is to see its reputation being fully restored in the eyes of our customers and in the eyes of the public. And underpinning that restoration of reputation are three particular factors, three particular issues that I have called out to all the people that work within AIB and indeed to our shareholders and to our customers. The first is a cultural change. We have made a very significant amount of progress in recent years in terms of emphasising the primacy of the needs of our customers. It's enshrined in our values, it's enshrined in our pillars. And if you were to ask anybody working in AIB, tell me about our values or tell me about our pillars, the first one they'll always say is, we put our customer first. And that's something that has been recognised externally. This is not just me saying it. But alongside that, continuing to put the customer first, we have further work to do in terms of enhancing our openness, enhancing our transparency, in terms of the way that we deal with all our stakeholders, be it employees, shareholders, policymakers, politicians, regulators. And I think that's something that I certainly will be promoting over the next number of years. On accountability, accountability is the second area that I want to see very significant progress. At a personal level, I'm very conscious of the fact that the Central Bank of Ireland is enthusiastic about introducing a senior executive accountability regime. A subject, and I think that the only thing that's delaying it now is parliamentary time. I welcome that development. I think it is something that should be applauded, and it is something that we're already preparing for within AIB. And the third prominent feature that I want to characterise my time as CEO of the institution relates to sustainability. The bank has a great and greater role to play in the decarbonisation of the Irish economy, in supporting renewable energy development within the Irish economy and further afield, and also in terms of committing to supporting sustainability of communities around the country. There is an inexorable drive out there towards digitalisation, towards mobile transactions. So if you go back to 2015, the daily interaction of our customers with us using mobile devices, and by interaction I'm talking about somebody checking a balance rather than necessarily doing a transaction, but the number of touch points between us and our customers that were conducted using mobile devices in 2015 was 150,000 a day. It's a little bit less than that. I think it was 148,000 a day. Today that number is 1.2 million. But despite that race towards digitalisation, I think it's really important that we continue to have best-in-class digital technology, and we are by some margin Ireland's biggest financial technology company, given the number of interactions we have with our customers. But that we marry that highly efficient, speedy means of engagement with our customers with a commitment to our communities in the form of our staff that operate all the way around the country, who live and work in every county in Ireland. And I remain very committed to the shop window that our branch network provides us with right the way around the island. We have over 200 AIB branches, we have over 70 EBS branches, and that is, I think, a really important part of our sustainability as a bank and our commitment to our communities. By sustainability, I'm talking about something far, far broader than renewable energy. Renewable energy, though, is a major personal priority for me and for our institution.
Okay, so just in terms of, thank you for that, just in terms of sustainability, is it reasonable to say that you are not expecting or planning any further branch reductions of the network? I think you're just over 200.
We are not planning any further branch reductions. In fact, we have plans to open some new EBS branches, and we have also been busily engaged in refurbishing branches around the country, around the island. Over the past 4 years, we've refurbished a very significant number, and we look forward to continuing that.
And other than the reference to some campus kind of non-cash type branches where you have ATMs and various automated machines, you're expecting to keep a full service in all of your branch network right across the country?
Typically the customers that choose to come into a branch are typically customers who like to see a welcoming smile when they walk in, and we try to provide that all the way around the country. So we're not talking about any diminution in the quality of the service that we provide through the branch network. What we are doing is trying to engage with our customers in the way that they choose. If you choose to, there are some customers who may never ever have to enter a branch, including mortgage customers now who can engage with us digitally entirely. We're rolling out a product which is being very positively regarded and positively received, which is basically allowing you to do your mortgage using digital technology. But I'm very conscious of the fact that we need to offer a wide variety of service points, digital, mobile, and in branch.
And you plan to upgrade and increase and spend a lot of money on technology?
Yeah, we spent a total of €870 million between 2015 and 2017 on the upgrade of our technology, and that's paid dividends in terms of the customer engagement and the customer use that I just referred to earlier. We will continue to invest in our technology at a slightly lower level, but we will still continue to invest well north of 200 million per annum over the course of the years that lie ahead. We have to do it. Obviously, there's ongoing technology enhancements, but we've it's a particular focus also on improving the bank's resilience in the face of growing cybercrime threats.
Okay, thank you. Just, Chairman, if you'd allow me, just in terms of the pay review and the cap on bankers' pay and so on. I mean, I know from your report or your questionnaire, you have 11 people on between 4 and 500,000, 15 on 3 to 400,000, 67 between 2 and 300,000, 856 between 100 and 200,000, and then 90% or more, 8,822 on less than 100,000. But it's still a very significant number of people, almost 1,000 people on over 100,000. Other banks have been into us and explaining that the pay cap and the bonuses and incentivised pay and so on is hampering their ability to recruit. Now, clearly there's 1,000 people or thereabouts on over 100,000, and presumably lots of them are working hard and doing their thing, but they're not being poorly compensated for it, and I'm sure everybody in the bank is well compensated in terms of what they're doing. What are your thoughts in terms of the cap that's there and the guidelines or the regulations in terms of performance-related pay and so on?
The cap has been in the focus of attention, but it only affects a very small number of people in the context of a total number of about 24,000 people across Bank of Ireland, AIB and PTSB, the people who are affected by the restrictions that were put in place a number of years ago. It is important, though, to note that there are many financial institutions that are not subject to these restrictions. And I read earlier this week that, thanks to Brexit, over 100 institutions are either coming to Ireland or increasing their headcount in Ireland as they seek to continue to have access to the European marketplace post Britain's possible, probable, whatever, exit from the European Union. We compete for the same pool of talent, and the most acute pressure that we're feeling is typically for those people who are in their late 20s, early 30s, who are being enticed to go and work in other institutions because of the fact that those institutions have flexibility in terms of remuneration that we don't have. We spend a considerable amount of investment on bringing really high quality graduates in. We spend a lot of investment on training them. They become wonderful, wonderful bankers. They become very good at relationship management. They become very good at writing credit papers. And then another competing institution that isn't subject to the same restrictions that we are comes along and says, well, thank you very much indeed for that investment. We're going to offer them a bonus. We're going to offer them other benefits. And they take decisions in many cases to lead the institution. But from our perspective, these cohorts are key to the future sustainability of the institution, because these are the future leaders of the organisation. And in many cases, they're being stripped out.
And in terms of, they're not so much affected by the pay cap, I presume. It's your pay structure being a base salary with not an ability to provide great levels of performance-related pay, as opposed to somebody else. They may be
it's the performance-related pay restrictions that are the problem.
So you could pay them a greater base salary and keep them, presumably.
You could, and you could impose a higher fixed cost base on the bank as a consequence. I would prefer to have the same fixed cost base and a greater variability in terms of cost, in terms of our pay.
Okay. And in terms of your, and I'm going to kind of conclude this, Chairman, in terms of your assessment of what a percentage bonus on a base salary should be generally, I mean, we heard of figures from London and various places where people were on 200,000 or 300,000, they were getting bonuses of double that. What's your assessment? Because clearly, in the bad times, people made decisions that they shouldn't have made. They lent out money they shouldn't have lent out because they were getting paid for lending it out rather than when it came back in and performed. What is your assessment of what is a reasonable level of bonus, or what equally is an unreasonable level of bonus based as a percentage of base salary?
I think that it depends on the part of the institution in which you work. It depends on many, many factors. It obviously depends on your own personal performance, but I think the key thing is that it is linked to long-term performance rather than short-term performance.
Okay. And just one very brief final question, if you don't mind. Your percentage share of the new mortgage market at the moment, is it what percentage? Our percentage share of the new mortgage market as a group is of the order of 30%, is that right? 30? 32. Okay. Thank you very much. Thank you, Chairman.
Deputy Doherty.
Fáilte ag an cóiste, welcome Mr Hunt and your team, and good luck to you in your stewardship of AIB, and I'm sure all of this committee wants to see the success of AIB, as the state is a majority shareholder, and we obviously want to see that bank successful, but in a way that is fair to its customers and treats its customers with the respect that was sometimes often lacking in the past, and I would argue currently is in many regards, and I'll delve into them. But I just want to pick up on Senator Horkan's line of questioning in relation to payment and remuneration. How many individuals within AIB do you believe should be paid above the €500,000 cap? There's currently 11 paid between the 400 and 500 range. So
the decisions in relation to the remuneration of senior executives is a decision for the Remuneration Committee of the Board. My views are.
But you're making the point that it's affecting the talent and all the rest. So there's 11 people. Obviously, the AIB could move others up from 200 to 300 if they so wish, and 300 to 400. But there's 11 people that are between 400 and 500. Obviously, yourself included, Mr. Hunt. So I presume it's those 11 that are being impacted as a result of the cap, or a portion of those 11. Maybe not all of them are on the 500. Maybe some of them are only on 400.
There are 11 people currently impacted by the cap, obviously. But the issue isn't the 11 people. The issue is the 10,000 people that are employees of AIB whose remuneration is different to all of our competitors, with the exception of Bank of Ireland and Permanent TSB, in that we don't have variable remuneration.
Mr. Hunt, I think that's a bit of a stretch to suggest that the people who your bank employs to service us as customers as we go into the branches are affected by the €500,000 cap. You know,
no, I'm not talking about the cap. I'm talking about the restrictions in relation to variable pay, not the cap.
Well, I'm dealing with the cap here because the issue you have an issue in relation to the cap. So is it just the 11 that are affected as a result of the cap? Like if we remove the cap in the morning, which I would strongly argue against, the ECB also argues against, it would be the 11 best paid in the bank that would be the beneficiaries of that. Would that be correct?
The key thing that is the key focus should be that if we have any change in relation to the remuneration restrictions, that they should apply to all people, so that we want to see the opportunity to reward our staff in variable ways. We want to see an opportunity to tie the reward we give our staff to their long-term performance. And this is
that's bonus payments. That's the reintroduction of bonus payments.
Or share options, long-term incentive payments. Yes.
Okay. Well, let's strip out the long-term incentive share options to the bonus one, which is literally the same thing anyway. That we've obviously got a financial. But like I sat in the banking inquiry, and sure, we all know what bankers did. They drove their staff to try and sell products, sell loans, on the basis that your remuneration was tied into the amount of products that you sold. It was far from customer-centric. Like, your staff should be rewarded appropriately financially and do what's in the best interest of their customer, as opposed to pushing products on a customer or pushing credit on a customer that the customer doesn't want. Well, like, we all have, you know, and it's 10 years now, but I'm sure many people in this committee have the memories of getting the phone calls or the text message through. You have now been just approved for an overdraft facility of €10,000. You have now just been pre-approved for a loan of X amount. This is, you know, this was the culture within the bank, and it was very much tied in with an incentive-driven, bonus-driven culture, which you're now arguing should be brought back to the bank.
I am arguing for the return of long-term incentives to the bank, and I know that the Minister has commissioned a report from Corn Ferry. That report is expected to be published in the next number of months. We await the conclusions of that report with interest. But I would like to point out that this is an issue that is uppermost in the minds of our shareholders. And when we go and engage with them, they want to see remuneration structures in the institution that align their long-term interests with the long-term interests of the employees.
Okay. Well, Mr. Hunt, the Irish people are the biggest shareholder. I haven't heard many of the Irish people say that they want to bring in deferred annual share plans for the top executives of AIB. So maybe your minority shareholders may have a different view, but the Irish people who have 75% of your bank, I believe, have a different view. And in that line is the proposal, which I think was extremely presumptuous of AIB to announce in their plan last year, because what you planned, what you announced, required us as legislators to actually change the law for you without any consultation or anything like that, and I would strongly oppose that. But is the now plan for the deferred annual share plan, which was to benefit the top executives within AIB to the equivalent of an annualised salary, is that now dead in the water as a result of the Minister blocking it last year, or is that something now that you, Mr. Hunt, as CEO of the bank, is intending to pursue with the Minister? Have you dropped this idea, or is it still a live option within AIB?
Well, just come back to the investors first of all. I'll come to that point in a second. By referring to the institutional investors, I'm talking about the international investors who've chosen to deploy some of their capital in the Irish economy through AIB. So they're the concerns that I'm reflecting, and I am obviously conscious of the fact that the state is a 71% shareholder in the company. In relation to last year's AGM, the bank brought a set of proposals to the floor of the AGM, and those proposals were defeated. We have our AGM again in a number of weeks' time, and we will not be bringing proposals because it would be entirely inappropriate of us to bring such proposals in advance of, firstly, the Corn Ferry report being published, and secondly, the Minister making his own position and the position of the government known.
Okay. Can I ask you, just in relation to the profits that AIB made last year, was what, 1.25 billion euro? In terms of Irish corporation tax paid, what was the total number?
I'm going to hand over to my colleague Helen Dooley.
It was 25 million in ROI profits on tax on profits.
In terms of corporation tax?
Yes.
What was the British equivalent of that?
The difference between 44 and 25. What is 19. It? 90.
Okay. And and if obviously the law was changed in 2015 to allow you to use 100% of your deferred tax assets, what would have, if the deferred tax assets were used up, what would have been the tax liability of the bank?
We don't report that information. I don't have that. I think it's important to note that the deferred tax asset obviously is taken into account when the bank is valued by both, which goes to the value of the state shareholding, the value of the bank overall. So the deferred tax asset is currently about 2.7 billion.
20 years, is that, or less than 20
15,
years?
it's, depending on profitability, obviously, it would take between 15 to 20 years to utilise. But I think in recognition of the fact that the banks were carrying such losses, that's one of the reasons the bank levy was introduced. And the group has paid circa 280 million in the bank levy since its introduction.
But if we compare, like you operate in Britain, there's a bank levy in Britain? Yeah?
There's not in the same manner.
It's calculated differently, but there's a bank levy in Britain. There's a higher rate of corporation tax on financial institutions in Britain than on businesses. Is that correct? Because they recognise the damage that the financial institutions did to the wider economy, so they're treated different and harsher in terms of corporation tax. And also the deferred tax assets can't be carried forward at 100% rate forever. Isn't that correct?
The treatment of deferred tax assets is different in the UK.
Yeah. So we have a levy over there, but we have higher corporation tax for banks above any other businesses, and we don't allow, or they don't allow, the deferred tax assets to be carried forward. So, like, there is a kind of, you know, it's a unique situation here where we're one of the unique countries in the world which allows deferred tax assets to be carried forward forever and at 100% level. Do you not feel, and I know that it's not you that wrote the law, obviously it was passed at a time with the support of Fine Gael and Labour government at the time, but do you understand the fact that AIB made, you know, 1,250 million euro profit last year and is not paying corporation tax on that profit in this state?
I understand that's the reality of the law here, that allows tax losses to be applied against profits. But I come back to the deferred tax asset on our balance sheet is an asset that is taken into account when valuing the state's investment in the bank.
Yeah, I think the report, and I'm sure you've read the report commissioned by the Department of Finance actually said that if we change the law back to the 50%, we still would be better off within a period of less than 2 years in terms of the amount of money we would get in tax, and even counting in a potential drop in valuation of the shares that we hold within the banks. Like, we're losing out. It's a lose-lose situation, and the beneficiaries of this here is obviously the bank. We do get a dividend, but also 29% of that dividend goes to international investors. Look, I'll move on from the issue. It's something we'll continue to pursue, or I'll continue to pursue here anyway with the Oireachtas. But in relation to where we are with the properties that AIB hold, how many of the properties are currently empty, or currently vacant, that are in AIB's possession?
I'll ask Jim to answer that.
So at the end of last year, we reported in our annual accounts that we had 583 PDHs and 45 buy-to-lets in possession in terms of vacancy. The Deputy is aware from previous discussions that we're obviously working with the Housing Agency in relation to constantly moving that stock through. Over a period of time, we've provided circa 1,500 properties to the housing agency, and at this point, the vast majority of those properties are available through the housing agency, and we're working with them. The good news in that regard is that what we've seen is, and we've discussed previously, I know we've all been challenged in terms of the take-up rate of sometimes in relation to those properties. The current phase is running at about an 86% take-up rate in terms of what we've offered, and we've another 150 that we're working through with the agency at the moment. So I accept the point that we do have that property, but I can assure you that the work continues to ensure that we continue to make that available for the housing challenge that the country is facing.
Okay, I appreciate that. But I wasn't making a point. I really want to know the answer to the question. So the question was, I know that you said 583 properties in your possession as of the end of last year, and 45 on top of that buy-to-lets. But the question I have is, how many of them are vacant?
By and large, the majority of those would be vacant. The majority of those would be vacant.
What's the majority?
I would say, because in some cases, they should all be vacant in reality, because in a lot of cases they've been handed back to us, because a lot of the housing stock that we're getting at the moment is coming back to us, is being handed back and left vacant in relation to it. So the majority of those will be vacant. And as we've gone through the work with the housing agency, that has been the experience as we've worked through it.
Okay, so have all of these houses been offered to the housing agency?
There's just a small number that haven't to this point, and that's just because of certain details have to be sorted out. But they'll go through it. It's not a reluctance on our behalf to make them available. It's just the process that we go through. But I would say, probably, 90–95% of them have been made available at this stage.
Okay. Can I ask you in relation to in relation to the appointment of fixed asset receivers? You mentioned in your statement the bank appoint fixed asset receivers. I questioned Permanent TSB in relation to this, and they don't appoint fixed asset receivers, they appoint rent receivers. Can I ask why AIB have gone down this approach, and can you also tell us in relation to the 519 assigned at the end of 2019, are they likely to be sold with those fixed asset receivers, and what option would a borrower be offered in those situations?
Okay, so clearly, as Deputy knows, I can't comment on how PTSB or other banks operate their organisations. But from our perspective, what happens here is that we're attempting to be in constant engagement with the borrower to work through in terms of find a solution and have the rent, etc., paid in terms of the debt. And at a point in time when we're unable to progress that, we'll move into the situation of appointing a fixed asset receiver with the purpose of actually selling the properties. So that's the point. In some instances, you'll have a situation where that may be prolonged and the fixed asset receiver actually collects rent. But it's not typical in the way we go about it that we actually appoint rent receivers. I'm not able to give you a light as to why that might be different in the other organisation. In relation, so the piece where we have fixed asset receivers appointed, the intent is in selling that property once we have them appointed.
If a buy-to-let customer is in arrears, so therefore there would be a breach of contract, does the bank have the power to appoint a fixed asset receiver without any further? I know that's not what you do. You've explained that you worked through and all the rest, but you have the authority at that point to appoint a fixed asset receiver because technically the contract has been breached. Is that correct?
Yeah, exactly. That's my understanding.
And in relation to your sales to the vultures of buy-to-lets, and up until the last 2 weeks you weren't selling PDHs to the vultures, but in your relation to your sale to the vultures in terms of buy-to-lets, obviously these individuals are in arrears of some magnitude. How concerned would you be if a vulture that you sold to decided to execute their right on the basis of that the individual was in arrears to immediately appoint fixed asset receivers as a policy option?
I think, Deputy, before we talk about what happens post the sale, we have to come back to the point as to why we got to where we got to with the borrower themselves. So all of the borrowers, and I talked about it earlier, and I think somebody mentioned, are we getting to the tougher end, or I may be misquoting one of the earlier speakers in relation to it. We are only because it's tougher to get engagement. We're not reaching the point where it's tougher to put solutions in place. We have been putting difficult solutions in place for a long period of time, working with customers to find solutions. The issue is the engagement. So therefore, when we talk about what is the risk when the loan transfers of the purchaser carrying out and appointing receivers, etc., that clearly that is part of the process that could happen at that point. But that process will happen with us as well, because the issue is that the borrower has not afforded us the opportunity to restructure the loan.
Well, yeah, what I'm talking about here now, and I'm actually talking about people who are making payments, and I'm sure that your loan sales are not, maybe we'll dig into this here, whether there are people who simply are not paying the bank anything, right, which are complete non-engagers. But I'm talking about individuals who are making contributions to the bank, how concerned would you be if a vulture, as a policy option, says you're in arrears, you have 30 days to clear your arrears. If you don't clear your arrears within 30 days, we are appointing fixed asset receivers and taking possession of your property. Something that no bank has done in this state as a policy, as a sweeping policy option. They may have looked at this as an individual case in terms of somebody who's non-engaging, but as a policy option, how concerned would you be that a vulture would do that? Because they have the right to do it.
Well, I don't know what is in the minds of the purchasers in terms of that. What the evidence we have to date is that the customers who've moved across have the opportunity to engage and start discussions. And we all know from anecdotal and indeed some of the research that has been done, and indeed the review that was done by the Central Bank and the CCMA in terms of how that operates within the purchasers, that they are afforded the opportunity under those.
The Central Bank is engaging on receipt of information that I've provided them, is engaging with the vulture in relation to exactly what I'm talking about. And this is the big problem. As the banks offload their loans to the vultures, you have no idea what way that they are going to treat your customers that were loyal to your bank for many, many years. And the reality is these vultures have the right to do exactly what I'm just after saying. The accounts in arrears, they have the right to call in the loan within 30 days, and they have the right to repossess. Something that no bank is doing as a broad sweeping policy, but the vultures, I understand, have started to do this.
And Deputy, the one item I would raise with you is that, and I think Colin in his statement spoke about the duration as to where we're at. It has to be recognised that today we still have over 1,500 people available to restructure and work with customers. As part of that, we write down debt, we right-size the loan, we work with them.
Yeah.
There has to be a recognition at a point in time that, again, 500 million moved out of the portfolio between when we started to look at it. There also has to be that position. We talk about the customers as being paying, as being loyal, etc. We have to challenge that point as well as we move through it in terms of we are affording every opportunity to the customers. And that's really, our discussions often move directly to the discussion about purchasers, etc. The key item for us is meaningful engagement is critical. With meaningful engagement, we can find solutions. And I mean, you know it, and you've acknowledged it here before. We've reached out in that regard.
No, I have, and look, and I make the point again. Like, bar the last sale, AIB hasn't sold PDHs, which is a very, very important point for many of us. We recognise your engagement with iCare in terms of the mortgage to rent. I think in some areas you have broken new ground. That's not to say that there is issues in terms of your sale to vultures which will take a different approach from what the bank has taken. But can I ask you in relation to the sale, and I asked the ECB this in terms of their approach to the sale of mortgage portfolios to non-profit organisations. Is that something that AIB would support or is supporting and I talk about organisations who are not in there just to make a quick buck, but who are involved in debt restructuring. Is that something that AIB is willing to look into?
Yeah, so I think previously we would have mentioned briefly that we were initiating a project with a number of externals to look at the feasibility of that, and we have put a lot of effort into that over the past while. It would be wrong of me today, I think any of the parties that we're engaging with wouldn't want me to go into any details or indeed give any certainty as to how that might take place. But I think we've embraced it in the same way as we embraced our approach to the championing the mortgage to rent for the market. And if there's a solution to be found there, we won't be found wanting.
But at a point, and I don't want you to go into any details or name any organisations that you may be involved with, obviously there's sensitivities around that, but as a point of principle, that it's something that you are willing to consider and look at in a genuine way.
Yeah, I think in reality, we've all spoken about what we are managing here is multiple outcomes. We have to resolve our NPEs, but obviously we want to resolve those through restructuring, but if there are other options available that allow us to achieve that and are customer-centric, we will certainly embrace that. Yeah.
You mentioned, Mr Hunt, in relation to, Mr O'Keefe, just when sales are happening to the vultures, is the entire file sent over? So if my loan was sold to the vulture, is my entire history given to the vulture, or is it just some of the headline numbers?
So the purchaser receives all your information.
Okay. Mr Hunt, you mentioned in relation to those who don't pay, and obviously there's those who can't pay and can't pay the full amount, and then there's those who don't pay. How many individuals how many borrowers with AIB are simply refusing to pay?
That's in terms of it. You see it in terms of the cohorts that are laid out there on the paper. Our issue is that, and we've got into these discussions before around estimating who's just not paying and who's choosing not to pay, etc. It's very difficult for us to actually put a number on that without the engagement of the borrowers.
No, forget about the rationale for them at the minute. Just how many individuals are simply not paying? How many, like, say, haven't paid for the last 6 months? Nothing.
So in relation to it, I think the closest in terms of what we've shared in the questionnaire is very much, if you look to the legal portfolio, that is probably the most closest number that I can share with you in relation to that. So you're talking somewhere in the region of 3,000 to 4,000 customers that have gone into the legal process. Some of those will be paying, some of those will have not. It's not a number that we've shared previously.
Sometimes we always tell people to engage, we always tell people to make whatever payments that they can make to the institution. But I understand when the bank is taking legal possession or attempting to take legal possession, there's an incentive for people not to pay at that time, right? So strip those out of it. So forget about the ones who you're now taking through the courts. Outside of them, how many customers of AIB have simply refused to pay anything over the last 6 months?
It's not something, Deputy, we've shared previously, and I'm not in a position to go into it.
Yeah, but you're suggesting that these customers are impacting on other customers, and that's the reason why we have high interest rates and all the rest. So, like, is it 10? Is it 100? Is it 1,000? Is it 10,000? Is there, like, if I ask, for example, in relation to your latest sale, the €1 billion portfolio, how many of those simply hasn't paid anything to the bank over the last year?
But, Deputy, in relation to the impact that it's having, the key impact that it's having is in relation to the capital that we have to retain in relation to those loans. So you're asking me in terms of what is the cash flow coming off of those loans into the bank, which is obviously varies across the loans that we have. And we haven't shared that information in terms of that previously. But what is very important to understand is that when we look at those in the legal and we look at those who are non-performing, we are carrying higher levels of capital in relation to what we have to hold, higher levels of provisions in relation to those. That is the key impact that is flowing out into the wider book when we talk about less than 5% of customers having an impact on over 95% of customers.
Yeah, I understand all of that, and I understand the issues in there. But there's a perception out here when we talk about non-performing loans that these people are not. And you mentioned about if people engage, we can find solutions. I want to just drill down. AIB is selling for the first time, 10% of these loans include the family houses. I want to know if they're engaging with you. I want to know if they're making payments with you. I want to know if they're making their best effort. Or are they, as the impression has been given out by AIB, non-engagers, non-payers, and really these bad folks are having an effect on all of the rest of you by pushing up your interest rates? Because I would argue that that's the kind of impression subtly that AIB is trying to put out. And I think the reason why you won't give us the information is because the majority of these are engaging with the bank and are making payments.
No, it's clearly from, just briefly on the point is that the customers who are in this position may be making some payments to the bank, but are not in any way servicing the loans that are there. The reason why we need the engagement is so that we can come to an arrangement with the customers to see what they are, whatever they're paying, plus something else, may be able to resolve it. And then we will also write down debt where we can. So that's the issue, is that they're not servicing the loan in relation to it. And we will have reached out and tried to engage with them on that behalf.
Thank you.
Conway-Walsh and Mr Hunt, I do wish you well in your new position. And thank you for your opening statement. I just want to go back slightly to the profits, just the profits in terms of the 1.2 billion last year. What was the profit for the UK operation?
With me for a second, and I get out the income statement. Pick it out. Yeah, sorry, just bear with me for a second. We're just going to
That's fine. Okay.
get the exact number for you.
Okay. Okay, yeah.
Can we come back to that?
You see, I'm asking you.
Helen is going to drill through the annual report when.
Grand. You see, I'm asking you in the context of the continuing efforts to deprive Irish citizens of what I would calculate to be hundreds of millions of euro over the 18, 19 years, where you will have the deferred tax, where you won't be paying tax. And I think that's what's of real concern to people, because the opportunity cost of that, of what those hundreds of millions could be used on, when people already see that they have paid so much on the bank bailouts. And I know there's efforts to pay some of that back. But I suppose it's the unfairness and the injustice of having an operation like yourselves, who make 1.25 billion profit on the Irish operation alone, not paying the tax. But I take it that that is something that government has to change, and that you are tax abiding yourself. And we can only appeal to government to see the sense in that, and to see the unfairness in terms of the opportunity cost of it. Now, if you have that figure there, I'll take it, but otherwise we'll come back to it.
The number was €100 million. In the UK.
So 100 million. And how much tax did you pay on the 100 million in the UK?
19 million of corporation tax, or the equivalent.
Okay, so 19 million you paid on 100 million.
19.
Yes, 19 on 100 million profit, and here you paid 25 million on 1.25 billion. I think those figures speak for themselves in terms of the injustice that this government is doing to Irish citizens in depriving them of hundreds of millions of euro that could be spent on badly needed infrastructure. You know, we have all this concentration around the Children's Hospital and the cost of that, and rightly so. But there's very many children's hospitals that could be built were the banks to pay their fair share of tax in this country. And if they can do it in Britain, why can't they do it here? You know,
ultimately, that's a decision for government.
I know.
But the DTA asset, the deferred tax asset, effectively sits on our balance sheet. It's something that is included in the valuation of the company, and it's worth bearing in mind that we've repaid to the state 10.8 billion of the total recapitalisation monies received, and the value of the AIB group, which includes that asset, to the state is still of the order of about 8 billion.
Yeah, I mean, I understand that, but when we live in a state, in a republic where we're told we cannot have respite for children with disabilities, we cannot do the infrastructure that's needed to be done, we don't have, you know, even minute amounts of money to be able to give to the most vulnerable in our society, then I think people can see the gross injustice that's been done, being facilitated by our government. Now, I have to move back to the prevailing rate. And I'm looking at the contract, or what's at the beginning of the contract, you see. When it outlines very clearly that the margin is constant. The margin is constant as set out at the beginning of the contract. And it's very explicit, because it says, so while your rate will move up or down in line with the ECB rate, you have the certainty of knowing your margin above the ECB rate will remain the same. It's really clear that the margin was meant to be, and this is why I cannot understand why you're not then saying that what you have done in terms of the retrospective applying of the prevailing rate isn't a breach of contract. It just doesn't make sense.
The customers we're talking about had either started with a fixed rate mortgage or a variable rate mortgage. They had no margin specified in their contract because they weren't tracker customers. The terms and conditions are composite terms and conditions that are used for tracker mortgages, fixed mortgages and variable mortgages.
So where is the certainty then that you talk about here? So while your rate, you have the certainty of knowing. So where was the certainty?
Our view is, had there been a tracker rate available over the intervening period, it would have been priced to be unattractive to customers. And therefore customers wouldn't have chosen the tracker rate and they would have gone to either fixed or variable.
No, I still don't get it. Where was the certainty here? Because I'm reading from a contract that's obviously was entitled to a tracker mortgage. So the entitlement of it has been ruled on. So that's fine.
If it was a tracker mortgage, there would be a margin quoted in your letter, and that is the margin that refers to. That margin doesn't apply when it's not a tracker mortgage. The margin isn't stated because there is no margin. It's a fixed mortgage or a variable mortgage.
But it should have been a tracker mortgage.
The customer requested a fixed mortgage or a variable mortgage. The customer didn't request a tracker mortgage.
No, it should have been a tracker mortgage, and they were entitled to a tracker mortgage. So all that's in dispute is the prevailing rate.
They were entitled to choose between the fixed, variable or tracker mortgage at the then prevailing rate. There was no tracker then prevailing.
They're entitled to it. They were entitled, and it's been established that they were entitled to a tracker mortgage. But applying
had there been a tracker rate available, it would have been priced at a higher level than either fixed or variable, and that's why we take a position that the customer suffered no detriment.
How many legal cases have you at the moment in the system around the prevailing rate?
We've got about 60 tracker cases in total. I don't have the breakout here. On trackers.
And is there how many specifically around the prevailing rate, around this issue that we're talking about here?
I don't have that detail here. It's 60 in total. From memory, the ones with regard to the prevailing rate it's a handful, 3, 4 out of that 60.
When do you expect the first one of those to be concluded or near concluded? What stage are they at?
Perhaps towards the end of this year or early next year.
Okay, so that should establish then what would happen, and I feel with great certainty the outcome of that may not be what you think it will be, because, and it comes back to and I think it's, you know, you using, what did you use again instead of breach of contract? What was the words you used?
Service. Well, service.
Breach of
service failure. I think it's
service failure. You see why? I know why you're using service failure, because according to the contract law, commercial common sense cannot be applied retrospectively. But it is a breach of contract when you have it outlined explicitly.
If a court did find it was a breach of contract, then the remedy for a breach of contract is damages for the loss suffered. And we come back to our position that we withdrew the prevailing tracker rate because we would have had to increase it to such an amount that it would not have been an attractive product. So therefore, the fixed and variable that were on offer were less than any tracker that would have been on offer. Therefore, we stand over that the customer has not been adversely affected. They've suffered no financial detriment here.
We'll agree to disagree. I think that will be established in the courts, and I would hope that out of your 1.25 billion profits last year, you have made provision for that. But is it true that your independent redress panel is rejecting all cases where an appeal is based on the issue of the prevailing rates?
There have been 96 cases decisioned, bar one with extenuating circumstances. All of the others have been rejected by the appeals panel.
On the basis of?
On the basis that they agree with our position that there is no detriment suffered to the customer.
Just remind me of the independent redress panel again. Who makes that up?
The independent panel is as set out in the central bank's framework for the tracker programme. It is made up of three, so it has to have, it's chaired by a solicitor, there is an accountant, and there is a consumer representative. We had the choice of putting an AIB representative onto the panel as well, as laid out in the programme. We decided not to exercise that choice to maintain the independence of the panel.
So there's nobody representing, no contact with, on the redress panel, there's no
AIB
representative on it. Right, they're instructed by the... Okay. I want to ask you about the EBS. We have a letter from you that you cannot furnish us with a copy of the report into the issue of EBS tied agents because of the ongoing litigation. But when do you expect the litigation to conclude regarding the EBS tied agents?
Again, towards the end of this year or early next year.
Right, and who else has seen a copy of that report? I mean, have the tied agents themselves seen a copy of it?
I really, Senator, given there is ongoing litigation, it's not appropriate for me to comment, but we are aware that a redacted version of the report was has been furnished to some of the agents.
Okay. Have you ring-fenced any monies for the possible compensation that need to be paid out, as happened, you know, in the tracker mortgage scandal? That doesn't presume the outcome, but have you ring-fenced?
We haven't taken any provisions with regard to this litigation.
Are you concerned about the reputational damage that it's done to the group by the fact that so many business people felt the need to take action against the EBS?
Again, Senator, apologies, I can't comment given there is ongoing litigation.
Well, I very much look forward to the outcome of that case. I just want to ask you in terms of fees. Your statement of fees tells us that it costs 20 cents to perform a contactless transaction, but that this fee is waived until further notice. What's the logic of this fee, that you would retain the right to charge it, but you don't charge?
Just before I hand over to Tom on this, it's worth bearing in mind that approximately half of our customers don't pay fees at all. If you're over 66 years of age, if you're a senior citizen, if you're a student, if you have one of our basic banking products, if you have a mortgage with AIB, you don't pay any fees at all. And we currently are promoting the use of contactless. It makes good sense from the bank's perspective, it makes good sense from the retailer's perspective, and that is why we are applying a zero fee to that currently. But I'll hand over to Tom now.
So contactless is our biggest interaction. There's 500,000 uses of contactless every day. It's currently at 0 cent. We have no plans to introduce a fee for that.
How much notice under the regulations would you have to give if you were to start charging that fee?
I understand it's 60 days notice to make change, to notify customers of such changes.
How many of your personal customers, as a percentage, have them 2,500 in their account every day for the average of a quarter to avoid paying fees, do you know?
I don't have that figure to hand. We can supply it afterwards.
Right. Okay.
But 50% of our customer base pay fees, 50% don't pay fees.
Don't pay any fee. And just back to the EBS customers, why are they treated differently by the bank?
The EBS account is basically, it's what's known as a basic account, which is to satisfy a CBI mandate that we have to have a basic account available. AIB has a basic account available as well. It's effectively a free bank account. It has limited facilities on it, but it's available to anybody who is resident in the EU and does not already have a personal account. But again, it has limited facilities.
Mm. So can a customer switch from an EBS to an AIB to avail of the cheaper rates?
Can a customer switch from
the EBS to AIB?
In terms of the current accounts?
Of the mortgage.
Of the mortgage they can, yes, but it would be starting the credit application again. It's not just a simple sign a form, it would be a full new mortgage. Now AIB will provide €2,000 towards the cost of the switch, but yes, there's no blockage to a EBS customer becoming an AIB customer.
So it would be like they were just coming from any other bank and they'd get the €2,000.
Yes.
Because it does seem quite bizarre that a state-owned bank can say it speaks for all its customers, but has an arbitrary difference in rates for some customers.
So we are in the lucky position, Senator, that we do have two brands in the marketplace, which allows us to serve different customer needs into the marketplace. If we had the same offer going through both brands, we wouldn't be covering off, as many different customer needs as we could, and it wouldn't make any sense to have the two different brands. Having the two brands allows us to appeal to customers who are looking for the certainty of fixed or the most competitive SVR in the marketplace. And on EBS, there is different pricing, but there's also cashback, which we know that some customers favour cashback.
So you're doing it for the good of your customers, and you're putting your customer first in this instance.
We try to meet as many customer demands as possible.
Okay, I just want to go back to you, Mr. Hunt, because you're starting. You're starting anew. Are you going to look back at, in terms of the tracker, at the €1,615? I mean, can you look at that in terms of the unfairness people feel about, well, not just the unfairness they feel about, but like there will be legal cases specifically around that, around how little that is. Would it not be worthwhile you just revisiting, that for the 4,000 people that are affected, and seeing if there can be, out of the what was it, 1.25 billion profits, that maybe it might be worthwhile, even as a PR exercise for the bank, of looking at that and saying, right, €1,615 is a minute amount.
What I would say is that this is an issue that has been examined very comprehensively within the institution, and it's worth bearing in mind that I have a very obvious incentive to draw a line under the legacy issues of the past. I want to start my period as CEO of this organisation by being as forward-looking as possible, putting to right bringing an end to the legacy issues, putting a line underneath them, but then looking forward. This has been very comprehensively dealt with. And earlier I made the comment that we will not be the ultimate arbiter as to whether the tracker examination programme is complete. That will be an issue for the Central Bank of Ireland, and we are very, very actively engaged with them in working towards the completion of this programme.
Yeah, you see, it won't be just the Central Bank, of course, it'll be the courts. And you see, in terms of the biggest shareholder being Irish citizens, even in terms of you just making a financial decision for the bank. I mean, there's a large cohort of these people in the process of taking High Court challenges. There will be huge cost to the bank on that, and the beneficiaries will be the legal system and those who don't need any more money. You know, whereas if it could be righted by re-examining it, having a look at it, talking to your customers, looking at, listening to your customers, that would seem a much better way of fixing the problem than dragging people through the courts and paying out huge legal fees.
We have examined over 40 different situations here. We've examined them very, very comprehensively and very, very fully. I am satisfied with the bank's position in relation to this.
We'll be discussing that issue again in the future. Thank you very much.
Thank you, Peter Murphy.
Just a brief question to follow up, and welcome to the committee on that point. When you said that it's obviously in your intention, it's in your interest to draw a line under the legacy issues, the tracker issues, etc. How does that tally with the attitude of the bank to the 6,000 so-called prevailing rate customers? Surely a different approach would enable you to draw a line under it.
I am very conscious of the need to balance all the needs of the shareholder, of the stakeholders that we have, our customers, our employees, policymakers, regulators, investors, and so on. I am very, very conscious of that need, and in every decision that we make, we are taking account of those needs. We want to do what is right. We want to do what is right expeditiously. Where we make mistakes, we want to correct those mistakes as fully and comprehensively and speedily as is possible. But we have looked at this issue. We've looked at it very, very comprehensively, and we are satisfied with the position that we currently have.
Okay, I want to go to a specific case which I raised with your predecessor in June of last year, the last time AIB was before us. Firstly, just before the details, so we talked about it a bit at the committee, and to conclude, Mr. Jim O'Keefe, who is present, indicated that the best thing to do is to come back to the Deputy specifically about the case, otherwise we'll get into speculation, made a general comment. And then the AIB very helpfully followed up a couple of days afterwards, asking for the details of the case. I responded with the details of the case, and that was it. I never got any further response. I followed up and again didn't get any further response. And so you had a situation where a case was raised at the committee that's obviously before your time, Mr. Hunt. AIB responds by saying, don't worry, we're happy to look into it. Obviously with no guarantee of what outcome, that's completely fine. But then when I go and try and process it, I don't get any joy whatsoever, and then have to wait, whatever, 9 months before you come back before the committee so that I can raise it again.
I was unaware that you hadn't had a response. In fairness, I think we had given a commitment on the day that we would follow up, and I was aware that we had followed up, so something must have taken place. I can assure you that I'll personally come back to you on this occasion.
Thanks a lot. Let me just raise the generalities then raised by his case, because he's not unique. I'll give you the set of circumstances that exists, and I believe he's probably amongst thousands of customers in this case. So it's an EBS, it's a tracker issue. He was on a fixed rate. When the fixed rate expired, he moved on to a standard variable rate. At the end of the fixed rate period, which was at a time when tracker rates were available, if you were a new customer walking in off the streets, it was available, there was ads and so on, tracker rates were being made available. He was not informed of all the options open to him. He was only informed of the fixed and standard variable rate options, despite the fact that I think it's undisputed that if he had asked for a tracker rate, the bank would have said, yes, he's entitled to a tracker rate. But the point is that he very definitely, he had like a theoretical right to access it, as in if he knew about it, he would be able to access it. But on the documentation that he was provided, which was official documentation granting him, informing him of his contractual rights, the option of the tracker was not given. And in the final response letter of the EBS, they say that EBS staff do not provide advice on which interest option to choose, as this is your decision, and the obligation rests with you and the customer to advise the bank accordingly, which is absolutely fine. But the point is that under best practice and under the spirit of the consumer protection codes, that he would contend and I would contend that EBS had an obligation to provide him with advice about the full range of products that were available to him. But it seems to me that that is contested by EBS and by AIB.
Okay, well, I'll get Tom to address that.
Great.
So, Deputy, I'm very happy with Jim to take this case and have a look at it. I would need to have a look at it in detail before I can comment on it.
Okay, well, just forget about the individual case then, right? Hypothetical situation, which has a similar parallel to this actual concrete situation. Hypothetical situation, I'm on a fixed rate in the 2000s. My fixed, say I'm on a 2-year fixed rate. I come off the fixed rate. At that stage, variable rates, tracker rates are available to the man off the street. I go into the bank, my fixed rate is ended, and EBS, provide me with a series of options on a piece of paper of what I can move on to. But included in that is definitely not a tracker rate, even though I have a legal right to access a tracker. Do you accept that that's a problem? Do you accept that I, as a customer which has a legal right to access a tracker rate, should have been provided with documentation which outlined that right to me?
I really can't answer the question, Deputy. I'd need to have a look at the case specifically. Certainly, if the customer had asked for a tracker, they would have gotten a tracker at that time. I agree with that point, absolutely.
Yes, but so that's agreed. I don't think there's any contest about that. That if a hypothetical customer in the mid-2000s asked for a tracker, I would have got it. The question is whether EBS fulfilled its obligations to, for example, under the Consumer Protection Code, by not providing me with written documentation, making it clear to me that I was entitled to access a tracker, and instead, as far as I can see from the response of EBS, effectively relied on the fact that I should have known about it because, sure, there's ads, there's billboards, etc.
Deputy, it's a good point you're making. The regulator in the last few years has introduced, within the context of the Consumer Protection Code, an obligation on banks to write to their mortgage customers and indeed their deposit customers, etc., but specifically on mortgages, to write to mortgage customers annually to outline the different rate options available. That's an obligation that was introduced in the last couple of years. With the benefit of hindsight, we can say, should that have been an obligation since we started lending money? But that wasn't, in fact, the case. So at any time you talk about the customer or an individual perhaps having the legal right, I don't think anyone has outside of contractual documentation, the customer had a right to request that they switch to a tracker, and they didn't. I think on the fact you're saying they didn't make that request.
Correct.
So I don't think there's any. Unfortunately, the customer didn't avail of a tracker when trackers were available. We have 104,000 customers who were on trackers when we withdrew trackers for new customers, and unfortunately he wasn't or she wasn't one of them.
But do you not accept that even under the spirit of the Consumer Protection Code at the time, that not to inform this hypothetical customer of their right to access a tracker was a mistake?
I don't think it was a mistake. I think...
I mean, I don't think it was a mistake, as in I don't think it was an accident. I think it was, very conscious, but sorry, continue.
Well, without the facts, but all I can say is at the time, if the customer had requested, as many customers did, a tracker, and if trackers pre-October 2008, they would have been able to move on to a tracker rate.
Obligations existed at the time under the Consumer Protection Code to offer product options that represent the most suitable from the range available, to act honestly, fairly and professionally in the best interests of its customers, to act with due skill, care and diligence in the best interest of its customers, and not through its policies, procedures or working practices to prevent access to basic financial services. But do you not accept that by not giving the information to the customer who has this right to request access to a tracker, that they have that right, that precisely the imbalance of power that exists between a bank, which are experts in these areas, and customers who are clearly not, that a problem exists there?
No, it is a cohort that we looked at amongst the 650,000 mortgage accounts that we examined. And we, in the context of the tracker mortgage examination, we came to the conclusion this was not an impacted cohort. And as Colin and Tom have mentioned earlier, the central bank will ultimately determine when the examination has come to an end.
Just one. Yeah, sure.
You should feel free to provide us with the details once again, and we will come back to you in relation to the specific.
Yes, I definitely will. We'll do that, no problem. In the EBS kind of mission statement in relation to the tracker mortgage examination, it says our review is still ongoing. It's found we fell short in our obligations to some customers. For example, instances where we were not sufficiently clear with them. This resulted in some customers being charged too high a rate of interest on their mortgage accounts. Do you not accept that that does describe this hypothetical situation where EBS was not sufficiently clear with a cohort of customers? You accept that there is a cohort that fits into this category about their rights to access a tracker at this time, and it resulted, not necessarily for all of them, because for some of them the trackers wouldn't have been the best option, but for some of them would have resulted in being charged too high a rate of interest on their mortgage accounts.
I think I don't think we impinged. I think, as you said, trackers were well known at that stage. So had the customer asked for a tracker, they would have gotten a tracker.
Mm-hmm.
So I don't think there was an imbalance of power. But as I said, we will absolutely take the case, and we will get back to you swiftly. And my apologies as well for not getting back to you swiftly. We will get back to you very swiftly on this.
Okay.
And Deputy, to be very clear, if we find something there that actually does cause us to change our mind on something, then not only will we apply it to your customer, we will apply it to any other customers impacted.
Yeah. Thanks.
Senator Burke.
Thanks, Chairman. I'd like to welcome Mr. Hunt and congratulate you and wish you well in your new position, and welcome the witnesses here today as well. Like all the other members of the committee, I've got a considerable amount of correspondence from people as well in relation to the prevailing rate. And just a few questions. When the central bank decided that you should compensate those people, how did you calculate what they should be paid? Because it would seem from all the correspondence that I have received anyway, that that you made a kind of an award to them all. The award was the same, €1,615, of which 615 went towards the legal costs or the lawyer or whatever. How come you arrived at the same amount? Is this the average amount, or had some people done well in this, or were there some people that were sold short?
In relation to this particular group of customers, that payment is made up of, as you say, €615 for advice and €1,000 flat payment to compensate for the service breach of not having the then prevailing rate available to them. So it's the same payment across the board to all customers.
Yes, but as I said, did some people doing well out of this, or were they all refused the tracker on the same day, or why is it all?
It relates to a group of customers who never had a tracker, who rolled off their fixed over a period of time between October 2008 and December 2013. That's when they all came off their fixed rate at a time when there was no prevailing tracker rate available to them.
But some people might have 100,000 borrowed, somebody else might have 200,000 borrowed. So how come everybody got the same?
It's to compensate for not having a rate available. Our view is the customer suffered no detriment. and therefore it's a flat payment for not having that rate available.
And how many, is it 6,000 or is it 4,000?
It is 5,912
impacted.
impacted.
And are there any cases being taken to the High Court in relation to this?
I mentioned earlier, Senator, you might have been out of the room, approximately 3 or 4 of these customers have initiated legal proceedings. Have.
All right. In relation to the sale to service, the recent sale, has there any loans been sold on people that were impacted by the tracker mortgage issue?
So as part of that, as part of the process, when customers are identified that are potentially impacted or impacted, there's a protection provided by the bank to make sure that we protect them from any further harm or processes. So as part of that, that would have ensured that any portfolio sales that we undertake where customers are in that process do not find themselves as part of that process. We wait until the outcome of the tracker review to conclude it. So the answer is no.
So there's nobody's loan has been sold that's involved in a tracker with an ongoing dispute?
Sorry, we've concluded our review. We've concluded our review across the portfolio and reached our position in relation to it. So at that point, once we've reached that point, and indeed we've had our other reviews, then the customer could form part of that. So if a customer is if we are still assessing a customer issue in relation to it,
yes,
then we wouldn't progress them through the process.
But you have sold the loans. The loans are sold at this stage.
That's correct.
And the deal is done. But there are some people who are in dispute with their tracker mortgage, and their loan is sold on to service. Would that be the case?
In actual fact, we will have reached a conclusion with the customer and said that this is the position. They will have received our letter from the bank as a conclusion of the tracker process. They may well remain in dispute with the bank in regard to that.
So all of those people have got notice from the bank to say that there has been a conclusion to their case that has been sold on. So we now find that people who have gone through this tracker mortgage case and their new owner of the loan now is service. Is that the case?
And Deputy, we will have made sure that we have reached our conclusion in relation to it and contacted the customer in that regard.
Yes, I fully understand that, but some of those loans are from people who went through the trauma of the tracker mortgage issue and have reached a deal with the bank. They now find that after all of this as well, that they have a new owner of the loan.
But so it's quite possible that somebody gets compensated for any issue with the organisation. But at a point in time, then what happens is post that we have to work with them to actually find a solution to the fact that they're unable to repay the lending that they still have, not even with the compensation having taken place. So what very often happens would be customer receives compensation for any item. We will then continue to engage them in relation to the loans they have with us to try and find a solution. And very often we find a solution and that's then concluded. The two issues are unrelated in terms of how we deal with it. One is we review it from the perspective of whether the customer is due compensation, etc. And then the normal relationship with the customer in terms of ensuring that the debts are being repaid has to be restarted.
Right. So anybody that's still under dispute, their loan isn't sold. but it can be sold at a future date.
In fairness, the language here is important because where we could have reached a point where we've completed our investigation and found the compensation and provided compensation to a customer, then we will enter back into a discussion with the customer to actually see how we can restructure and deal with their loan. If they're unwilling to engage with us or haven't engaged with us in that space, then it is possible that they would form part of a loan sale.
And any of them that are gone down the legal route, where do they stand?
Well, in terms of if they're taking a legal case against us?
Yes.
Well, that will still stand in relation to it.
So that loan won't be sold on?
In actual fact, I might have to defer to my colleague here in relation to it, because actually what I might ask is, you obviously have a specific case or number of cases that you're referring to?
Well, what I'm trying to establish is that the people that have loans that are in this tracker loan, who have tracker loans, who are in dispute with the bank, that they find that their loans have been sold to in the last deal, the last loan sale to service.
But Deputy, what I need to highlight to you is that we will have reached a conclusion with them in relation to it. If there's an ongoing legal case in relation to it, that would obviously work through separately. But yes, there will be customers where we've reached a conclusion in relation to the tracker, we've compensated in some instances, and then the customer, we're unable to resolve their debt. The key item here is they are two completely different issues in relation to it. One is the tracker investigation and making sure the customer is compensated. Post that, we have to engage with the customer to make sure that they can actually repay their loans.
Okay. And the ones that are able to repay their loans, they're being held by the bank. They're seen as good loans at this stage and they're not being sold.
Exactly.
So it's the ones that are not engaging or who can't meet their repayments, these are the ones that's being sold. When everything is taken into account, the compensation and everything is taken into account.
And the only item I would add is that where they can't pay or they're having difficulty meeting those loans, we will restructure the loan. We will work with them to restructure the loan. And the challenge for us is to get the opportunity to be able to restructure the loan.
And in that case, it won't be sold either?
And in that, if we reach an agreement to restructure the loan,
yes,
and we sign them up to a new loan structure, etc., having written off debt in a lot of cases, etc., then that loan does not form part of the current loan set.
Okay. Thanks, Chairman.
Senator O'Donnell.
I want to welcome Mr. Hunt. Can I just, and his colleagues obviously, can I just take up a few quick points? I basically take your presentation is that you want to get the non-performing loans down to 5%. You want that down by the year end, putting forward the reasons for it. And you make reference to the fact that you have to provide 3 times the level of capital that would normally be provided in Europe, right? The questions I want to ask really are, at this moment in time, how much do you owe the Irish taxpayer at the moment? What's the current debt to the Irish taxpayer in terms of the money put into the banks? If you get the non-performing loans down to 5%, when do you get to a point when the European authorities will allow you to relax the level of capital you have to provide? What impact that will have on interest rates, what impact that will have on lending, what impact that will have on the taxpayer getting the money back that has been put into AIB. So I really, I suppose, want to get a perspective on how getting the outside of the pain and hardship to the people on the non-performing loans, and we deal with them every day of the week. I want to see the light at the end of the tunnel, right? And we're now 2008. We're now almost 11 years from the bank guarantee, and you made reference to it earlier yourself. So, where's the light at the end of the tunnel on this one, Mr. Hunt? I have very little time, so maybe.
Yeah, sure.
Yeah,
sorry, I'll be as concise as I possibly can be. So the total amount of money is repaid to the state of the order of 10.8 billion. So that means that there's still 10 billion that is considered to be outstanding, of which about 8 billion is embedded in the value of the company in terms of the 71% shareholding.
So as it stands at the moment, the state investment is less, the market value of the state investment is less than the book value.
Well, based on the current share price.
That's fine, yeah.
Based on the current share price. In relation to the issue of how the NPLs impact on our balance sheet, there's two impacts. First of all, you have the credit default history. Because of the credit default history in Ireland, the weightings that the risk weightings that we are compelled to apply to our asset base are significantly higher than they are in other European countries. Now, that's something that's only going to correct over time. There is a very, very long observation window there that the regulator applies in arriving at the risk-weighted asset, so that the weight that they apply to our balance sheet. So that will improve over time. They also apply a requirement, so the NPLs, the level of NPLs is also reflected in what we call our core equity tier 1 requirement. So the regulator tells us how much money we need to retain in the form of capital.
I'll be honest with you, right?
Yeah.
All that stuff, that's great, and we've been over it, right? Feels like we're going back to the time of the bank guarantee, but I just want to know, for the ordinary person out there looking in, we speak about bringing down non-performing loans, right? I want to know what impact that will have on the relationship of the banks in terms of the interest rate they charge, because you continue to speak about the non-performing loans, a drag on interest rates. I want to know how it will improve the range of lending. And I want to know how it will make AIB more marketable to potential investors in terms of the state getting back its investment. So cut to the chase. Okay. I understand about...
Sorry.
Okay, so for the ordinary person looking in, what impact will it have on reduction of interest rates? And because it's... Okay, you have to get to a point where people see a benefit to what you're putting forward, because at the moment, all they see is a negative in terms of people in homes and non-performing being under extreme pressure. And we're dealing with, so all my colleagues have dealt with that area. I want to deal with, show us the light.
Okay. Well, it'll give us a stronger balance sheet. There'll be less of a capital drag on the company. It will make us more attractive to international investors and to investors.
Will it bring about a reduction in interest rates?
And as a consequence of the increased efficiency of the balance sheet, it will open the possibility of the mortgage rates in Ireland, the margins across all actually lending, being lower than they currently are.
And when do you anticipate that the European authorities will allow some flexibility on the level of capital you're to provide? Because obviously there wasn't sufficient provided for the rainy day,
no. So
you don't want to go to a situation whereby... So what I'm trying to get to a point where that the state will be able to get its investment back, and people who are existing customers in AIB and new customers will get a competitive rate relative to our European. Because if you're talking about the level of capital you're required to provide relative to elsewhere in European banks, we are continually look at our sister countries within the EU, and many of them are providing interest rates to customers far lower than you're providing here. So if you're looking for the NPLs to come down, you must reciprocate by getting, and you're looking for European norms, you must reciprocate by providing European norms and interest rates as well. So are you willing to provide the other side of the equation with reduction of interest rates to European norms?
Well, you would have seen we introduced a number of rate reductions earlier this week in terms of our fixed rate offering. We extended our fixed rate offering within AIB. What the commitment we can make is that as we normalise our balance sheet, that's what we've got control over. As we normalise our balance sheet, we will obviously be engaged with our regulators. But the capital weightings that are applied to the balance sheet is ultimately a decision for the regulator. We're continuing to make progress on that. We want to put the balance sheet into the best possible state so that this bank can continue to support our customers through the next phases of the economic cycle.
Well, then let me put the question finally in another way. Why are the interest rates that AIB are charging are so much higher than European norms at the moment?
There's a number of pieces of research done on this in recent months, but you can basically summarise it as...
I'm asking for AIB.
Oh, yeah. So a reflection of credit default history in the state, the amount of risk-weighted assets, and you're not effectively comparing apples and oranges because of the different structure of fees here compared to Europe. Fees in Europe tend to be of a different magnitude.
And are you saying the fees are higher in Europe?
Yes.
And are you saying then that if you get to a point where the NPLs are down to European norms, do you anticipate that we'll be looking at interest rates that reflect European norms being charged by AIB to customers, both variable and fixed? How long will that take?
The observation window is probably of the order of about 10 years, but the 10 years, the most recent observations are the most important. So you will see you should see an ongoing improvement in the capital drag on the balance sheet, but you won't get to the end of that period for a period of 10 years. You won't get to the end of that adjustment for a period of 10 years, but there will be ongoing improvements.
Well, if you get the non-performing loans down to 5% by the end of this year, will we see a measurable reduction in interest rate charge to customers?
We don't comment in terms of future market movements in mortgage rates.
Would it be a reasonable observation that if your drag, as you say, on the bank on what you can deliver to other performing customers, if that issue is no longer on your balance sheet, does it follow that your interest rate should be more competitive?
I can't comment on the timing of it, but what I can say is that the direction will be positive from the point of view of total borrowing margins as the capital drag on the balance sheet is reduced.
Question?
Yeah, a few extra questions, Chair, if I may. Just in relation to the share price, the state shareholding in the bank. So the price was 4.40, I think, at the time of the IPO in June of 2017. It's currently trading at about 4.10. There seems to be a drag on bank share prices generally across Europe. Market capitalisation 11.1 billion. So 71% of that, as you've pointed out, is about €8 billion. From the point of view of the operation of the bank, Mr. Hunt, and the direction that you would like to see the bank travel over time, is it your expectation and your wish that the state shareholding would be reduced incrementally to the point where the bank would be returned to the private market and private ownership completely?
Ultimately, the scale, nature, timing of any share disposal is a decision for the state. My job, the job of all of us working in AIB, is to ensure that the company and our performance is that we're continuing to deliver an investable proposition to the market. We are very heavily engaged with our investor base. We'll be publishing our interim results for the first half of this year towards the end of July. But our primary focus is on ensuring the performance of the bank is amongst the best of our peer group, but so that if and when the government makes a decision to reduce its shareholding in the company, that can be seen as a successful and fairly valued transaction.
In relation to the issue of interest rates and risk-weighted assets, and the report recently published by the Department of Finance, I think, was very helpful in just highlighting the link between interest rates and the capital requirements in terms of the risk weighting. So for AIB, the figures it reports for the first half of 2018, in this report, 30% is the total figure quoted. For performing loans, it says 26%, and for non-performing, 73%. So as you reduce your NPLs, is your risk-weighted asset figure improving? And then, as you say, over time, the look back, it's a rolling look back as such, and so the picture is improving. But how strong is the link between those capital requirements, those risk-weighted asset requirements, and mortgage pricing? I mean, if we were moving towards European norms in terms of risk-weighted assets, would there be a clear link with interest rates?
Well, there is a clear link, because the greater the risk weightings, the greater the capital drag, the lower the profitability, and the higher the interest margins. So as your balance sheet is put into a better position, as it becomes more efficient, the performance of the bank will improve and the interest rate margins should be compressed.
Okay. And I think it is important just to put on the record the fact that AIB has led the way in rate reductions, and I think it's interesting when you look back over the last number of years, and one of the tables in the questionnaire is quite useful. At June 2013, for example, the variable interest rate for loan to value between 50 and 80% was 4.29%. It's now 2.95%, and similarly for lower loan to value of less than 50%, it was 4.09%. It's now 2.75%. So a reduction of over 130 basis points, which is very welcome. And the recent announcement of the improvement of your fixed rate offers is also very welcome. And I think it's fair to say it surprised some analysts who were predicting that the movement was going to be in an upward direction. So can you explain the thinking? Is it a change in focus that you've always prioritised variable rates as a bank, but now you're also becoming more competitive in the fixed rate market? Is that because customers are showing a preference for more fixed rates and you want to be competitive in that space? What was the thinking?
I'll hand over to Tom in a second, but we're very conscious of our standing and our role as the largest provider of mortgages to Irish consumers. And we keep our product offering and our pricing under constant review. We have had a very, very attractive SVR product in recent years, but we monitor market developments, and it is clear that an increasing number of customers, both current and potential, are interested in having more competitive fixed rate offerings. So the action that we took earlier this week, the action that we announced earlier this week, it was simply a move to enhance the quality and the range of our products in order to ensure that we continue to be an attractive, well-priced provider of mortgages to our customers. I'll hand over to Tom.
Thank you, Colin. Deputy, you've almost answered your own question in the sense of it is around providing choice into the marketplace. It is about reacting to customer behaviours. It is about providing different cohorts of customers with different propositions that different cohorts find attractive. We have seen, as you'll have seen, the marketplace move significantly towards a fixed rate offering, and therefore the rates we announced this week make us competitive in that space.
Sure. Just in relation to culture, so on Monday we have the Bank Culture Board is issuing its report. So perhaps, Mr. Hunt, you might give us a sense of what AIB is doing in tangible terms to improve its culture. As I said earlier, you've referred to a customer-focused culture. We await to see what the recommendations are from that Bank Culture Board. AIB is part of it, is co-funding it, and presumably will buy into whatever recommendations are coming. I don't know what they are yet, but in tangible terms, what are you doing as a bank to ensure particularly that the voice of the consumer is heard when decisions are being made?
Do you want to talk about the voice of the consumer, Tom?
Yep. So
the voice of the consumer, Tom.
The voice, well, the part of my remit over the last 4 or 5 years since I've joined the business has been to be the voice of the customer in the room, and we have a chief customer advocate that sits at all ExCo meetings or the executive committee meetings. That basically brings a challenge from a customer viewpoint.
That's a person, is it?
And until very recently, that's been me, and I've handed over the baton to Jim. We have also got a group conduct committee, which is about taking conduct from the regulator side, and from the regulator's point of view, the conduct risk agenda is a very large agenda, and that effectively says put the customer first and put the customer at the heart of your thinking. So we're tackling this both from a regulatory point of view, but also from a culture point of view, in terms of having, Colin referenced earlier that we stood up one of our core value is put customers first, and have the customers at the heart of your thinking. So The customer agenda has been building through the business over the last 4 or 5 years. I think we have come a long way on that journey, but I think we have more to do.
We've spent a very considerable amount of time working on our brand values, and the annual appraisal process we go through now is 50% what you did, but 50% how you did it. So it's about how you actually lived those values. And the primary value is that you put your customer first. We've enhanced and introduced a new purpose statement, which is that the purpose of the bank is to back our customers to achieve their dreams and ambitions. I've met very recently with John Hedigan, who's chairing the Irish Bank and Culture Board. We have nominated our head of consumer banking, Robert Mulhall, to be AIB's representative on that board, and he's a member of my team. He's a member of the group executive, and I think that is a very clear indication of the seriousness with which we treat the whole cultural issue. But as I said earlier, Deputy, the three building blocks that are necessary, in my view, for us to fully restore our reputation over the next number of years, culture is a critical one of them. And we have the customers, we've had an increasing focus on customers in recent years, and that is well recognised externally. But the fact of the matter is, we have further work to do as we enhance our culture towards being a more open, transparent, and might I say maybe a little bit less hierarchical organisation as well.
Yeah, it just brings me to my final point, and it is reverting back to the whole tracker and prevailing rate issue. And it's really an ask on my part, because there are a lot of people who are watching in on this issue or will read the transcript later on. And I would just encourage you as a bank to move away from what I would regard as an overly legalistic approach to this issue. And I know, Ms. Dooley, you have a job and you're essentially the chief legal person within the bank. But I think the real test of culture change comes when a bank is faced with a situation where you have the bounce of the ball, and does the ball bounce on the side of the consumer or on the side of the bank? And when it comes down to a choice, and I think you need to replace the thinking of what must we do with what should we do. And for me, looking objectively, and I have looked at the paperwork and the documentation objectively, I think the bounce of the ball on this issue should favour the consumer. Because when you look at the paperwork, it's very evident that there is an omission in the mortgage contract. The mortgage contract refers to a tracker margin in another part of the document, and it's just not there when you go looking for it. So what you're doing, from my perspective, is, as a bank, you're benefiting from an omission in your own mortgage documentation. And I think that is wrong. And if I were you, Mr. Hunt, coming in now as a fresh new CEO, I would look at this again and I would remove the risk, which I think is potentially a very significant risk, that the High Court, or indeed the Ombudsman, will eventually force the bank to change its position on this issue. And for the journey that you have travelled as a bank, and the work that you have done to repair your reputation, and in dealing with the other tracker-related issues, it would be a great shame if you were forced to make a change of direction on this issue. And I would just leave that as a final message, that I think move away from that legalistic approach of what do we have to do, and replace it with the thinking of what should we do to demonstrate as a bank that we really have changed and we are putting the interests of consumers first. You have an opportunity to do it on this issue, and I would encourage you to do so.
Thanks, Deputy. Mr. Hunt, in your opening statement, you were referring to solutions such as the development of mortgage to rent with iCare, and saying that you also engage with external agencies such as IMHO, Step Change and the IFA. Can you broaden on that, please, and deal with the question, if there's potential with the homes or mortgages now in distress to do much, much more of the sale to, I suppose, agencies with charitable status or agencies that are acting directly in the interests of saving the family in their home?
Chairman, I'm going to ask Jim to answer that question. Sir O'Keefe.
Chairman, so as touched on briefly, we certainly are engaged we discussed with the committee previously the opportunity to look at what would it look like to have a charitable, to organise with a charitable organisation to transfer loans to them, and how that would work, etc. And we have put a lot of work into that in the recent while. At this point, I'm unable to give you colour behind that in terms of where we've got. I think the other parties who are working with us wouldn't want me to do that either at this stage, or even to estimate the certainty of it. But I can assure you that if that works, we won't be found wanting in supporting it.
And Jim and his team have the full support of all of us working in the bank. You know, we are willing. We're very open-minded in terms of approaches to the solution of this issue.
Do you see potential in the general business model of getting those loans to an agency like that, of that sort, and keeping the people in their homes, those that want to pay but are still under pressure?
Yeah, I think there's definitely potential there. I think, Chairman, the challenge for us is just to find the way of how it will operate, and that's the work that we're doing, that we're working through with the partners at this point.
My concern is that, you know, as these sales come up, that I think it was Deputy Doherty that said it, you're getting down to the more difficult cases, and it's easier to sell them on to a vulture fund than it is to continue to drill down into the solutions that might be found for them. So I would just encourage the bank, in relation to whatever organisation you're using, to try and expand on the proposal that's there, and to engage with that proposal before you engage with a vulture fund. I say that because, you know, like other banks and the central bank, you tell us that the protections travel with the loan. You know, very shortly you're going to hear through this committee the effects that a vulture fund can have on individuals and how they're treated. And it just flies completely in the face of all of that legislation and protocol and the protections that we talk about. It doesn't work. And that's why I think that there is an onus on the banks, regardless of how difficult it is, to continue to drill down into these loans and to determine if you can keep people in their homes, have them pay a sustainable mortgage or rent, whatever it might be. And that's what I'm appealing to you to do. I've said it to the other banks as well. On the issue about the non-performing loans and the Irish Central Bank and the European Central Bank and all of that, the members here were with these organisations some time ago, and you get mixed messages that they're not telling you to do this. This is a target that you're reaching of your own accord in an attempt to get your books in order, and that there's a lot of solutions besides vulture funds that should be examined. So you kind of present it as a very definite stick that you're being beaten with, and in fact the ones that you say are holding the stick are telling us, well, actually that's not the case.
We have very clear direction from the regulator, the ECB, in relation to the future trajectory of non-performing loans. And the ECB is currently signalling, has indeed signalled, that in the event across the European Union that non-performing exposures are not reduced, that they would be effectively putting a punitive capital weighting on those exposures. So it is very clear to us that the regulator, the prudential regulator, wants to ensure that we can get our balance sheets into the best possible shape as quickly as possible.
And how was that particular piece of information passed to you? Is it in the form of a letter from?
Well, there has been some talk about calendar provisioning in the marketplace. I understand there's been some issuance in relation to Italian banks. In relation to ourselves, I'm not in a position to currently state how that has been communicated.
You might let us know how this is. The other issue in relation to your opening statement is you talk about some of the committee members being strongly opposed to the sale of NPL portfolios and that, particularly to the vulture funds, and I'm one of those. I think that the banks, and I appreciate what you're doing. I want to acknowledge that I do understand the efforts you're making. But in relation to your statement here, the customers that are in difficulty didn't just walk in on their own to this difficulty. They were accompanied by you, banks, in walking into the difficulty. And I keep on repeating the cases that went to the bank for a normal house, came out with a mansion and 2 cars, and no possibility of ever being able to repay the loan. So while you would say that you have an onus to look after your general customer base, there is also an obligation on you, I think, to accept the responsibility that you were part of the problem. And therefore, to go back to my previous point, to drill down heavily into those loans and try and assist the people to get back to performing in some way again. Because we're losing a generation of entrepreneurs. We have a lot of families feel that they have been completely beaten up by the banks, and they're trying to recover from that. So I would, like to see a lot more being done by the banks. I'm not asking that people would be freed of their loans and off you go. Yes, there's pain in it, but I think to give you the other side of the story, to sit it beside your statement there, they weren't to blame all on their own.
Look, we have a clear desire to work in an agreed way with our customers in the resolution of these difficult cases. We have a larger suite of solutions than any other bank in this state, and as Jim mentioned earlier, we are continuing to work on increasing the range of solutions available. We want to come to an agreement with our borrowers who are in difficulties. That is our primary objective in this particular area. But at the same time, there's an overriding requirement to deal with the non-performing exposures issue, which means that we can't rule any option out in terms of how we address this very challenging issue.
The tracker issue then, I know that you're going through an analysis of how that happened and why it happened. I mean, at this point in time, do you think it was deliberate by the banks that the whole tracker issue happened? It happened at the same time in all of the banks. So where will the fault lie? Where will you investigate? Who will investigate as to who took the decision relative to all of this?
Well, ultimately, the tracker examination process is coming to an end, and now we're moving into a tracker enforcement process, which is likely to lead to the institution being levied with a fine by the Central Bank of Ireland. And we will see what comes out of that enforcement process. But ultimately, the tracker issue, which, as I said earlier, is a very large stain on the character of the bank, on the reputation of the bank. The tracker issue, the enforcement is underway, and when we see whatever comes out of that examination, we'll address the issue.
Yeah, I understand that, and and the point that you make about the fine or sanction, whatever, by the central bank, but because of your newfound interest in the welfare of your customers and so on, will you be trying to delve deeper than that to find was it deliberate in order to help to rebuild trust with your customers? Well, it does seem to us here as we listen to the banks that it was a deliberate attempt to save the bank at one particular stage and burn the customer.
We've established over 40 different groups of customers who are impacted, and each and every one of those has led to a root cause analysis of why it happened. There are control failures, there are miscommunications, there are not meeting our terms and conditions, there are sending out the wrong terms and conditions. There's a range of reasons which we're now, as we go through, we correct why that happened to ensure it doesn't happen again. Not through any of those investigations have we found a deliberate action by anybody to remove trackers from customers. Not through one. I mean, the trackers were removed for new business back in October 2008. 104,000 customers who had trackers before that kept their trackers. But there was unintended consequences of the decision that was made, which was why customers who had a right to a tracker no longer had that tracker. And that's the issue that we're dealing with today. The central bank enforcement issue will go root and branch through the organisation, and it is going root and branch through the organisation, and leaves no stone unturned in terms of looking for, was there any deliberate attempt?
And are we likely to see a complete report on that at the end of that process, do you think?
The central bank typically publishes a short 3-4 page statement with regard to its enforcement actions. Given the extent of trackers, whether it will be a longer statement remains to be seen, but the exact failings that the central bank finds will be specified by the central bank when they publish their statement.
You mentioned earlier on your 25 million tax paid. Who paid that tax?
Which what, sorry?
You said you paid 25 million, was it, in tax?
In corporation tax.
There would have been Allied Irish, old friend Allied Irish Banks, PLC.
And where did they operate?
In the Republic of Ireland.
Is that who you represent, Mr. Hunt?
Yes, I represent AIB Group.
Who else would you represent?
And Allied Irish Banks, PLC.
And would you represent Allied Irish Banks PLC?
If it's a group company, yes. So
I'm just asking.
Yeah. So the ultimate group company is AIB Group PLC, and it's all. There are still, unfortunately, about 150 companies in the group. We are trying to reduce that number.
Do you have any engagement with Deutsche Bank? Servicing agents.
In what regard?
Just asking, do you have any engagement with Deutsche Bank? Do you represent them in any way?
Not that I'm aware.
Okay.
We would have had an involvement with Deutsche Bank at the time of the IPO, but they would have been acting for the state in terms of assisting the transaction. Okay. But I'm not aware of any continuing.
Yeah. And EBS then, you're a separate bank, but all of your figures and transactions come under the. Is it one set of accounts for both banks? Or do you have to provide?
They're consolidated, but individual accounts are published for each group entity that has a bank licence, including EBS. I think they were recently published for EBS.
Yeah, because it's two separate licences, isn't it?
Yes.
Deputy Doherty, did you want to conclude on this?
I do have a series of questions here. The issue of the prevailing rate, I know it's been well teased out here. I think Deputy McGrath's final contribution is one that I would echo. Mr. Hunt, you've said that the tracker mortgage scandal has been a stain on the reputation of your bank and indeed the banking industry here. It will be a personal stain on your own reputation as the CEO if you do not deal with this properly and the bank and the courts find against AIB. These are the vast majority of impacted customers identified within your bank 11 years on from this issue, and we have nearly 6,000 people who, many of them feel, who haven't been properly redressed. There has been a bit of a play of words here earlier on in terms of service breach and contract breach, which are significant in terms of their terms. Can I ask you, Mr. Hunt, is it AIB's position that in relation to the entire amount of individuals, the 11,934 who were impacted by the tracker mortgage scandal, that there was no contractual breach by AIB in relation to any of those individuals?
In certain of the 40 cohorts, 40 different circumstances we arrived at, in certain cases there were very clear contractual breaches.
Okay. So, for example, you gave us a list in relation to the 640 individuals who had a tracker before fixing and whose in terms and conditions allowed them to return to a prevailing rate at the end of the fixed rate period. Was there a contractual breach there?
To be honest, Deputy, I'm happy to sit down with you and go through these. I wouldn't have the detail to hand right now.
So these 640 individuals who their terms and conditions allowed them to go back onto a prevailing rate tracker at the end of the fixed rate period, they didn't go back onto a prevailing rate tracker after this was resolved by AIB. They went back to the original tracker rate. This is the same issue that has been denied of the 5,915 individuals which Bank of Ireland are fighting through your own assessment and indeed the independence appeals process.
Well, this cohort
AIB,
is
sorry.
This cohort is a cohort that did either originate on a tracker mortgage or at some point had a tracker mortgage. And when we took into account ancillary documentation in addition to the mortgage contract, we felt, and this was often the case across numerous cohorts, that the marketing material may have led them to believe that tracker was available for the entire 25, 30 years of the loan. So, as I say, I don't have the detail in front of me for that particular cohort, and I appreciate at times it may look like we are taking a very legalistic approach, but we do take into account the full, the holistic picture of what the customer's expectations might have been, including brochureware, including advertising, letters that would issue over the course of the mortgage.
But what about the issue, and this kind of goes back to the contract stuff and I'll return to this, but what about the issue that where the contract is vague, it always has to be interpreted in the behalf of the customer. It can't be interpreted, the vagueness in the contract cannot be interpreted on your behalf. And we've discussed this before, other members have raised the issue. The issue in terms of prevailing rate is not defined. A tracker rate is defined under condition 3.6. It is very clear, your advertising material makes it very clear that the only thing that varies is the ECB portion of that rate. So given the vagueness of the contract, and court ruling after court ruling has established this as a fact that the authors of the contract cannot benefit from the vagueness of a contract. And even taking away that legalistic approach, if you're genuinely customer-centric, you would be taking that approach regardless of case law in relation to this matter.
And again, it comes back to the position that we withdrew the tracker rate for all new customers, as did the entire market at the time, because of the dislocation in financial markets and our inability to fund. In hindsight, should we have retained a tracker rate at a very high rate at 10-12%? Perhaps, but we didn't. We haven't manufactured a rate now for that period, but what we have proven through independent analysis and expert opinion is that if there had been a tracker rate through that period, it would have been higher than the rates that did continue to be offered. Therefore, the customers have suffered no detriment. So yes, you're right, Deputy, the contracts must be interpreted or construed in favour of the party that doesn't draft it, but essentially the point as to what losses the parties to the contract have suffered remains the same, and it continues to be our view that the customers did not suffer any financial detriment.
Yeah, but there was no tracker rate at the time, so you have engineered a tracker rate and you have done that retrospectively.
We haven't done it retrospectively. We've conducted analysis that we believe demonstrates that if we had maintained a tracker rate, it would always have been more expensive than the fixed rate and the variable rate.
Can I just explain to me how this was not a contractual breach, right? So, you know, I have no legal background in this here, but somebody entered into a contract with AIB, and in that contract it states very clearly, after a period of time, you can go on to a tracker rate at the then prevailing rate. You didn't allow them to go on to the tracker rate. Therefore, that term in the contract was breached. You know,
I think you're right, Deputy. I think it could be construed as a contractual breach, the way we've characterised it in our communications to customers, because from our point of view, we failed to maintain a prevailing tracker rate. That's what we call, and unfortunately we do have them in other scenarios, not just for mortgages, we call it a service failure or a service breach. And the amount of 1,000 that we've offered for that service failure, I think Tom mentioned this earlier, is the sort of amount that the Ombudsman would typically be awarding for a failing of this nature.
but why do, if it is a contractual breach, because you dismissed that it was a contractual breach?
No, we
why
didn't.
don't you...
We didn't dismiss that. We said we're describing it as a service failure.
But is it not a breach of contract?
The court may determine it is a breach of contract.
It shouldn't have to go to the courts.
But
do you not understand? These 6,000 people have a contract which states that they are entitled to a tracker rate. Forget about the issue of the rate that it was going to be applied at that time, but their entitlement to a tracker rate was withdrawn by AIB unilaterally. It is a breach of contract. If I was, in simple terms, if I was selling you a carpet for your house and you paid me a couple of grand for it, and I was to lay it in 6 months' time, and you came to me and says, "Look, I'm not doing carpets anymore. I'm only putting down tiles." That'd be a breach of contract. That's what AIB done. They had entitlement to go to a tracker rate. You withdrew a product which you had contractually an obligation to provide to your 6,000 customers. And why can't you just call a spade and not mince words and, just say, yes, we broke your contract, instead of coming up with clever words that it's a service breach and trying to be a bit more cuddly and a bit more, whereas you broke their bloody contract. It's black and white, and then the issue is that you have a vague contract, which case law says that you have to interpret that contract in the not to the detriment of the customer, and you cannot retrospectively engineer a rate. You have to go to the point where the contract was entered into. Like it will be played out in courts. I've seen some legal opinion, very serious legal opinion, and lawyers will differ and all the rest. But the idea, Mr. Hunt, the idea that you're going to allow this to play out in court, your new CEO is an opportunity to resolve some of the legacy issues, and you should take that. You should take this opportunity. You should take at least this opportunity to put fresh eyes in relation to this here. And I want to ask you a particular question. Will you give a commitment to this committee that, in relation to any individual that is taking court proceedings against AIB, that if AIB settles that case, that you will ensure that all other 6,000 members who are affected by the same situation will also be settled with? Because we've seen it too often where somebody's got a very strong legal challenge, somebody's willing to take an institution like yourselves on. AIB knows that they have them, or an institution knows that they have them, and they settle. Therefore, with a confidentiality clause, they pay out, they manage the settlement, they pay out in relation to the one or two individuals, but the other 6,000 are left high and dry. And can you also talk to us in relation to the statute of limitations, in relation to whether that will apply in relation to these other 6,000, many of them who haven't initiated legal proceedings at this point in time?
Thank you, Deputy Doherty. I'm going to hand over to Helen in a moment. It's very, very clear that this is an issue which is of grave concern, and we have this genuine focus on putting our customers first. We have comprehensively looked into the issue over the course of the past number of months. We have come to a position on it, but I very much hear the comments that were reflected here to us this morning. I'm going to ask Helen to comment now on the legal points that you raised with us.
On the last point, Deputy, with regard to statute of limitations, no, we've waived our rights with regard to statute of limitations for the tracker tracker population.
Yeah.
With regard to if a case is decided, if we settle a case, when we settle a case, it may be on an extraneous factor. It may not be. Where we settle a case, our practice typically is to look across the book and see are there any other similar circumstances. We don't drag people through the courts unnecessarily unless we firmly believe that we have a good position to defend. But we can't commit that a settlement would be extended across a population because settlements are often are always on a case-by-case basis.
Will you inform the Central Bank of Ireland the rationale, the specifics of the case and the reasons why you settled? Because like, I'm aware of other, it's not AIB, but I'm aware of other institutions individuals who took them on through the courts and were settled on the steps of the courts with a confidentiality, a gagging clause. And there are thousands of customers out there that are in exactly the same position but are not getting the benefit because they're not aware of it. So now I brought this issue to the Central Bank and let the Central Bank play their consumer protection role. But
the Central Bank are requesting regular reports, certainly from us, with regard to litigation and progress of litigation for trackers.
Will that include any legal settlements in the rationale?
I believe it does, yeah.
Can I ask you just briefly on a couple of issues? In terms of NPLs, how many of restructured mortgages that are meeting their terms of their restructured arrangements are classified as non-performing loans within the bank?
I don't have that number to hand, and we haven't disclosed previously, Deputy. But there will be mortgages within that category whereby, for a period of time, as an example, once a mortgage is restructured, it has to go through what is called in the NPE kind of technical field a probation period where it has to work through. So there's a number of there are mortgages in that category. Is
it only that situation where they have to wait? They have to be fulfilling their terms of the restructuring for the 12 months. We had another financial institution here that's involved in restructuring where individuals are meeting the full the terms of the restructuring, but because of the type of restructuring, for example, a split mortgage where over 20% of it is warehoused is deemed by the ECB as a non-performing loan. Do you have categories of individuals that fall into that area?
Yeah, we've discussed previously the split mortgage item, which is different in our case in relation to it, that the split mortgages don't sustain into a non-performing exposure, where there are rules within the non-performing exposure whereby we have reduced rates, or we are dependent on the customer selling the property at the end of a period that actually captures that those loans as well. But as I said, I don't have the numbers in terms of the detail on that.
Do you have any numbers in relation to customers who are fully engaging with your bank, who are making the maximum payments to your bank, that you've looked at their standard financial statements, but that the only solution determined by the bank is either voluntary surrender or repossession, that the bank have determined that these individuals will ultimately lose their homes?
Yeah, so I think in one of the questions today we would have shared with you what the voluntary surrender numbers are in terms of what we've gone through. I think it's important to note as well that when we get to a point with the introduction of the enhanced mortgage to rent and the solution that we put forward with iCare in particular, allows us to deal with customers who have no affordability, and therefore if the property fits within the categorisation of the social housing rules as laid down by the state, there is an opportunity there for the customer to remain in their home in that regard. But we do share the details in relation to it.
Yeah, but obviously, like, for individuals who've submitted standard financial statements, the bank has looked at them and they've determined that this is unviable and that surrender of house or losing of the property is the ultimate situation here. How many are we talking about? I know that you're engaging with iCare. We actually welcome that. We welcome the fact that there's more mortgage to rent. That's very positive. There's quite a number of positives that I could talk about, but I want to get some specifics here. Like, we would have a central bank report that would talk about those in long-term arrears of 2 years or more, which total 40,000 between buy-to-lets and PDHs. And the Central Bank in last year's report suggested that for 50% or more would actually lose ownership of their homes in that scenario. So from the bank's position, you have the standard financial statements, you are able to assess whether this is viable, whether this is sustainable or not, how many of them that are engaged and that have submitted standard financial statements to you that you currently believe that the ultimate solution there will be loss of ownership.
And Deputy, as I said to you, I don't have that number available. It's not something we've disclosed previously, but we do provide the committee with the details of those that actually do take up a voluntary sale or voluntary surrender.
In relation to Project Beach, is it the latest sale? It's 1 billion. Is that correct? 1 billion book value. What was the sale price for it?
So we disclosed that we received 800 million for the sale of the loans.
800 million. And how many, was it 220 family homes that were involved in that sale?
There was 263 PDH properties, family homes attaching to the portfolio.
263. Is it the intention of AIB now to, given that this is a new threshold that you have crossed with the sale of family homes to vultures? I understand they're securitized. Is it now the intention to go down this road with potentially other sales of family homes to vulture funds in the future?
Yeah, so I think, and it is really important that we always come back to the fact we have diverted the attention of quite a quantum of the team to make sure that we're working through our PDH solutions, our family home solutions. So our key message here today is that we want engagement because we have solutions. That is really important. As we've said to you previously, we are working through the wider portfolio of assets that we have, investment, commercial, etc., so that we could allow enhanced mortgage to rent, discussions and charitable loan sales, etc., to take place and give us, as we call it, headroom to achieve that. That has worked for us. You will appreciate the difficulty we've had and the connectivity of the recent sale in terms of what we've just described. But as we go forward and as we go out beyond the end of 2019 and we see other targets, that is a real probability that we have to put on the table, is that if customers don't come to us and avail of all the opportunities that remain for restructuring, that would form part of a portfolio sale.
So the only, and this would be a new departure for AIB, that would sell family homes that aren't securitized in other business assets. But are you saying to the committee that the only sale that will take place is where there is complete non-engagement and non-payment? That's the impression that you've given with your latter contribution. Where we haven't, through engagement, that we have not solved the issue. When you say non-payment, we discussed this earlier in terms of one of your other queries. There is some payments coming through in relation to loans, but they are not meeting the requirements of the loans. Those payments, if the customer engages with us, with maybe some adjustment, could be the repayments that are required to actually restructure the loan. But the customer needs to give us that opportunity. So what I can absolutely say to you is that where customers have meaningfully engaged with us, and by that I mean provided information. The committee asked earlier around, are we getting to a difficult part of the book in terms of reaching solutions? I would say that the solutions that we can provide are no different. The challenge is on engagement and very often non-provision of information. And that is key. Once we have that information, then that allows us to get to the point of having a restructure and does not require us to put it into a portfolio. Two quick points. I'll put both of them together. And my colleague talked about the fees and the deferred 20 cent per contactless. Obviously, you sought permission from the central bank to apply that, which I can understand why you would ask for permission to apply a 20 cent for contactless. I know it's been waived at the minute, but you have the permission and you can apply this at any time. So I would suggest that is actually, that you don't apply that, but you do apply a 20 cent charge for direct debit purchases. So if you use your chip and PIN, it's a 20 cent charge on every transaction. You are quite heavier on charges in terms of ATM withdrawals and other areas. Can I ask you to explain the justification, in your view, for a 20 cent on each charge for somebody who uses their bank-link card on a chip and pin transaction? And finally, the issue, which unfortunately, because there are so many legacy issues with the bank, where we're dealing with prevailing rate and issues in terms of vulture sales, that we're not getting the opportunity, and maybe that's some of our fault, but these are the pressing issues, that we don't get the time to discuss the future of the bank and the lending strategy of the bank. And maybe if I can ask just one question, in your opening statement, Mr. Hunt, you talk about the performance of the bank in 2018. You said that new lending had exceeded €12 billion. It was up 15% on previous years, and mortgage lending rose up 16%, up to €2.8 billion. Does the bank have targets for 2019? Can you share those, or are they sensitive in terms of new lending? And do you expect to see the same type of increase that was achieved last year? And are you on course to meet that, or are there issues now within the market that are suppressing some lending, whether it's queries in relation to Brexit or uncertainty, or indeed the housing market at this point in time, particularly with the funds coming in and buying many of the properties that's available? Okay, thank you.
I'm going to ask Tom to address the fees issue, and then I will come back to you in relation to your last point.
So in relation to fees, yeah, it is 0 cent on the contactless. We have no intention of introducing the 20%, the 20 cent there. In relation to the other charges, I would point out that we are cheaper in terms of the over-the-counter, except your point about the other digital transactions. What I can say is that all of those fees and charges right now are under active review.
The 20 cent on chip and pin that's scandalous. Like that's ridiculous. Like, there's many places that don't have the contactless still, and I would say that most consumers do not know that when you go in and buy a loaf of bread and put in your chip and pin, that you're charging you're paying 20 cent TAB. That's quite hefty. I had an issue with another bank who was charging half the amount. And one of the problems here is that it doesn't appear. There's a complete unawareness. It comes in your monthly statement, but it's all rolled up into one. Our quarterly statement is all.
I accept your point, Deputy. And as I said, they are under active review at this moment in time. And the only point in relation to the contactless is there are 500,000. We have 500,000 contactless transactions every single day, and I would urge every one of our customers to use it consistently.
And it is the fastest growing means of payment in terms of what consumers want it. Just in relation to the strategy outlook, I'm not able to tell you what our actual targets are for 2019. That is market sensitive. But in general, can I just make a number of points? We are, notwithstanding the fact that we have an operation in the UK and we have an office in New York, we are predominantly a retail banking operation, headquartered here in Ireland. Ireland is our home market. We are reliant for our future sustainability on the lending that we make today and how we treat our customers today. Over time, our medium-term target is to see the balance sheet of the bank continue to grow in line with overall nominal GDP growth in the country. So looking at the total amount of growth in the country, taking into account the growth in prices. We look forward to the balance sheet growing. A growing balance sheet is of concern to our investors, but my primary obligation is to ensure that the balance sheet growth that we enjoy over the years ahead is appropriate and sustainable.
Thank you very much, Mr. Hunt and your colleagues for attending today. Thanks to the members. The meeting is now adjourned until the 18th of April at 9:30. Thank you.